Oh, I'm sorry, I'm talking to myself. What's up, team? So today we have non-farm payroll data coming out. Not it's prelim payroll data, so I should clarify. It is prelim data coming out today, but it's still relevant. We also have services PMI data coming out too. Also, I should say, and so that both of those things should influence the market. Like it's not the biggest influence, but like we should have some interesting stuff happen today. Um, and We'll put the scrolling at the bottom of the screen. What's up, Hannah, Joey, Doctor Bow? What's up, guys? Oh, Tilray also about to drop their earnings. So Tilray, TLRY stock about to come out with their earnings in the next like 3-4 minutes. Here's Tilray right now. It might influence the rest of the cannabis sector. It is a cannabis stock, and so maybe it influences the cannabis sector. We'll see. Um, Again, I've been starting the stream a little bit later because I've noticed people aren't waking up as early as they were like 6 months ago. Ford, yeah, market dumped on the jobs data yesterday on the JOLTS report. Market did not like that at all. Everything's down pretty substantially. I think it's really a time where you got to just chill and wait. I'm probably gonna average into some positions. Let's do a poll. Will the ADP be bigger influence than the ISM? I'm assuming you're talking about. So ISM services PMI drops today, and then the other one is the ADP non-farm employment change. So ISM is the Institute of Supply Management. I mean, they're both relatively decent like reports, but and we also have 30-year mortgage rates coming out in about 2 minutes as well as Tilray earnings. So we got a bunch of stuff dropping right now. But yeah, we got ADP numbers. Just based off of like generally, okay, generally the biggest release is going to be the ISM services PMI data at 10 o'clock this morning. That's probably the largest release. Non-farm employment change data is kind of prelim payroll data. This Friday, along with unemployment, we're going to have non-farm payroll and unemployment. I believe unemployment is expected again the day after tomorrow. At unemployment's expected at 3.7%. Non-farm data is expected at 163,000. So that data drops this Friday. That's a bigger release than today's the prelim employment data. So we get like it's the prelim payroll data, right? Every time payrolls drop, the Wednesday before they drop, we get prelim payroll data with the non-farm employment change at 8:15. We got the timer up that drops in like an hour. And then on Friday, a couple days later, we get unemployment and non-farm payrolls. Yeah, I mean, again, when I look at this, I try to look at it in terms of trend. I will say though, the market's dipping a little bit more than I thought it would. And it is really at a key level now in terms of like whether it holds. Like we could still be in this uptrend, but we're now under some pretty big milestone levels. The 200 EMA is one of them. We dipped under 420 for a little bit. We also had some major support at 425s. And so again, I mean, if I'm being honest, I don't like the market as much right now relative to where it was a couple weeks ago. I think it looks bad if it keeps on dipping. And so again, I think with such a key week or two coming out, like this week we got unemployment and payroll data on Friday. Next week we got CPI, PPI, the FOMC minutes report, and just an array of other data. And so it's just a big week, man. And again, when the market's dipping like this, we'll see what happens. The JOLTS report did dump the market bad yesterday. Yeah, the JOLTS report is really what weighed us down. ADP is expected here. We're going to put it up on screen, but ADP is expected at ADP is expected at all right, 30-year mortgage rates just dropped. They came in lower than expected at 7.5%. So mortgage rates dipping a little bit with the broader market. The ADP data is expected at 153,000. So it's expected at 153,000, and it drops at 8:15 a.m. Again, I think like one thing though, here's the thing to understand about this, okay? Like what we saw from the JOLTS report, which is that more jobs, like negative job openings, caused or I think it was negative. What was it yesterday? Let me see. I'll have to go back. So yeah, the JOLTS report actually coming in way higher than expected. So more jobs signaled very bearish action in the market. Tilray is supposed to release their earnings right now as well. And so I think one thing that we're going to see with payroll specifically, very correlated with jobs, I think the market wants less payroll numbers. I think if like the payroll numbers are expected at 153K for payroll data. I think payroll numbers expected 153K. I think we want less than that, right? Like that would make more sense, right? Like y'all can correct me if I'm wrong. I'm pretty sure the market wants less payroll numbers, less jobs data. They want less jobs, less people working, because less people working, like the whole reason the market didn't like the JOLTS report is because it signaled way more job openings than expected. More people working is not necessarily good, in that it signals more spending, and more spending is bad in a inflation fearing market, and like that's kind of what's going down right now. Hey, what's up, Daniel? The SBF trial. And so again, let me know if the market. I'm going to actually ask this on the poll because I think this is relevant. Will the market react? How about this? Does the market want higher or lower non-farm employment data? Higher is going to be an option. Lower, I don't know. All right, so yeah, we're gonna ask this question: does the market want higher or lower ADP non-farm employment data? Let me know what you guys think. That poll is live. Vote on that poll. Speak your mind. What's up, Kay? The market's very red over the last couple days. Yeah, the JOLTS report definitely moved the market more than I thought it would. Generally, the JOLTS report doesn't move the market that much. But yeah, this one was different. So apparently you were right, Casey. It's all good. Because yeah, the JOLTS report basically tanked the market. And again, I think like using that to with in mind to date, looking at the non-farm employment data, the ADP data coming out in about an hour, I don't think the market wants higher payroll numbers. I think less is more right now, and I think less is better, and the market's going to react better. I think if the market's fearing inflation, if treasury yields are pushing up too much, and the market's fearing inflation, I don't think the market wants more jobs. And I think so that's something you want to pay specifically attention to, not just today for employment data. And then we have services and non-manufacturing PMI later at 10. But Friday, we have unemployment and actual payroll numbers. So like today's kind of the prelim ADP data. So yeah, today's like the prelim ADP data. Tomorrow or Friday, I should say, we have the actual unemployment and payroll data, and I think the market wants less. Like I think if the payroll data comes in light, the market's going to behave in a positive way. I think if payroll data comes in high, market's going to react negatively. I think if unemployment comes in low, that's not good. I think I think the market wants higher unemployment and less people working because that means less people spending. Ultimately, we did have Tilray earnings come out. We're gonna put the Tilray numbers in chat. Yeah, so look, here's Tilray earnings. Tilray came in at 10-cent loss per share. First quarter revenue about 177 million. What was expected here? Let's see. All right, so they were expecting a 5-cent loss per share. They ended up losing 10 cents per share, 160 or 177 roughly in revenue. They expected 174. So Tilray had higher than expected revenue. But see, Tilray has just been diluted so much. This is why I'm just not confident in cannabis stocks anymore, man. Like, I'm just not confident in them. Again, I don't think that either of the current administration, I don't think either of the current sides of politics wants cannabis legalized. I've talked about this before. I just don't think either of them want. I think they're getting too much money. And the prison industry is really big as well. Law enforcement lobbies against it. I don't think we're going to get federal legalization anytime soon. And I think cannabis stocks, because of that, are going to drag. But maybe I'm wrong. I don't know. Do you find it ironic that more jobs is viewed negatively? Would that be in a period of low inflation? This would be viewed positively. I mean, I don't know if it is ironic because it goes against convention, like you're saying, like it kind of goes against what's conventionally good. Like, obviously, conventionally, the market wants low unemployment and more jobs, but right now, but to be honest, it's been like this off and on, really. It hasn't been like this consistently, but it's been like this off and on for like the last year straight, over probably the last 2 years. It's getting to a point where we don't know how the market's going to respond to economic data. One of my big things here at this channel is we stream economic reports and data. That's like my niche. We're the only person that really gets them all consistently in terms of economic reports, press conferences, FOMC, Jerome Powell meetings, stuff like that, like earnings. We're the only person that streams all of that stuff, I think. But one thing that we've seen pretty steady over the last few years is that the market's been inflation fearing, with inflation so high. Now that kind of pivots back and forth depending on what like CPI and other inflation data comes out as. But a lot of the time, the market has not wanted economic growth, is really how I boil it down. Like, it's all based off of economic growth. Does the market want economic growth? If we're in a recession-fearing market, it does, right? If the market's fearing a recession, like back when the banks failed earlier in the year in March, the market wanted economic growth, and it reacted positively to that economic growth. But as the market kind of more so sides with an inflation-fearing mindset, that is when the market does not respond well to like the JOLTS report yesterday coming in really high, or payroll numbers on Friday this week. We'll see what they come in as, or today's non-farm employment change data, the ADP non-farm employment data. If these numbers are high, the market's probably not going to react well. The market wants lower employment, lower jobs, less economic growth, I should say. And but it's really nuanced. It really is. But you have to understand also, TG, like the thing to really understand about it is that the Fed's job, like, okay, so the Fed raises rates, right? If you really think about why they raise rates to discourage spending and jobs. Like, that's why they raise rates. When they raise rates, it makes banking more expensive. Banks raise interest rates to consumers afterwards. And when that happens, consumers have less money to spend. So they stop spending as much, and it discourages spending and economic growth in a lot of different ways. That's why the Fed raises rates. That is why the Fed raises rates, is to discourage that type of spending. Because if inflation's really bad, what's causing inflation to be bad, right? High spending is. And so the Fed's job in raising rates is to discourage that indirectly, if that makes sense, right? And once you start looking at it like that, you understand, like, the Fed wants to discourage spending. They don't necessarily want high spending because it means worse inflation problems. Anyways, look at the SPY rip back up to 422. So we're starting to see some resiliency this morning, at least. The whole market's pretty red yesterday, though. Yeah, look at the E-mini pop up. Tilray dropped earnings, but it's not really moving that much. And then we got Tesla here. A lot of stuff's just down big. Yeah, all good. Yeah, let me pull stuff up. So yeah, guys, hit that like button here. One thing that really helps the stream is bumping that like button. We appreciate it. We got 24 likes. We could do better. Yeah, NQ, NASDAQ starting to pop up a little bit. It's an interesting market right now, though. It really is. Like, I definitely don't invest in it. I don't do that either, though, Casey. You know, I'm not morally against it, of course. Like, I don't think that, you know. All right, team. So yeah. What's up, Biggie? What's up, Jonathan? Bob? I don't think that's the job, but all right. So the AMC annual meeting. The meeting is November 8th. Can I stream this? So the AMC meeting is going to be November 8th. Can I stream it? Does it allow me to stream it? It's the annual meeting. I should be able to stream it, right? I think I can. Tesla back up. I mean, Tesla didn't really like it. Here's the interesting thing about the market yesterday, though. So again, we zoom out here. The SPY dipped pretty heavily yesterday. Like pretty big dips yesterday on the SPY. Like the SPY dipped from 425s all the way down to 420s. So just pretty big drops, right? The interesting thing, though, is that Tesla, some of the larger weighted stocks like Tesla, not really the biggest red day. It's pretty flat from yesterday. Nvidia had a pretty big dip from 450s down to 430s. You know, we had some other drops in tech too. AMC still under $8. Let me zoom in. Is this better? I'm sure this is probably a little bit better. And again, we got an hour before the ADP data drops, guys. We got 1 hour until the ADP non-farm data drops. All right, but look at Tesla. Tesla rising back up. Let's see if there's any news. I don't think there is, but we can check to see if there is. Yeah, Tilray reiterated their EBITDA. If you ever hear anybody say EBITDA, like there's a lot of confusing jargon in trading, right? Like a lot of jargon is very confusing, and you don't really know what it means. EBITDA, once you hear it, you'll remember it, right? EBITDA stands for earnings before interest, taxes, depreciation, and amortization, right? EBITDA is how it's said. And so again, earnings before interest, taxes, depreciation, and amortization. And so if you ever hear a earnings release is usually what this is going to be around, like earnings. EBITDA stands for those things. But yeah, looking at these, I don't see any news for Tesla, but you can see Tesla ripping up pretty big. Yeah, a lot of people are very nervous. S&P erased most of its gains from 2023. Let's see when the year started for the SPY. That job report just cracked markets. I mean, we're still pretty green on the year. Again, like here's where we are now. We're right around 423. So really we're about right here. And again, I'll be honest though, this is looking much worse now. So here's where we are now. Right? The year started here. And so I mean, we're still pretty green on the year overall. It's not a huge green action. Like let's see how much we're technically up on the year. But we're up a little bit this year. So we went up from 390, we'll call it, all the way up to 420. So that's $30. So on the year itself, we are still up about 7.8, or about 8%, a little bit under 8% on the year. So that's a pretty good year. I mean, you know, we'll see if we continue, but that's about what we'll take it. If the market's going to give us 10% this year, yeah, jolts was definitely a thing. What do you mean IP, Bob? They get non-farm employment data coming out today. Let's look at our poll numbers here. We asked people, does the market want higher or lower ADP non-farm employment data? Higher? I don't think so. I don't think the market wants higher employment data. Do y'all? I mean, look at the JOLTS report yesterday, man. The JOLTS report, the market definitely didn't want higher JOLTS. JOLTS came in way higher than expected. The market dumped, like, fast, too. And so I think, no offense, but I think the voters are wrong today. I think the market wants less employment data. And let me look at the JOLTS report. Sometimes these can be really nuanced and actually signal the opposite of what they sound like. Yeah, so it's a measure of the monthly change in non-farm private employment based on payroll data. It's used as a predictor for labor markets. Yeah, so again, higher jobs reading. I don't think the market wants higher jobs reading. No. So I asked, what does the market want? So does the market want higher or lower ADP non-farm employment data? 45% say higher. I disagree. I think the market wants lower employment data. I think the market's going to react positively to lower data. But look at the SPY. I mean, the SPY's back up some. I mean, it's definitely not giving back all of its gains from yesterday, or all of its losses from yesterday. But it's back up to 423s. I mean, I think that's a good first step. See if the market can just pop back. That would be lovely. Apple's really been giving it back, though. Again, hey, slap that like button, guys, if you haven't already. We appreciate it. We do have, oh, man, I forgot to swap this out. There we go. All right. Again, y'all ready for jobs report here? What is weak for US dollar is good for markets? Well, sure. Yeah, based on yesterday, based on the JOLTS report, I think the market wants less. Victoria's Secret. They have a stock? What's the stock? No, they do have a stock. That's $15 a share. Down pretty big on the year. I mean, I don't know. What's interesting is, like, was this a SPAC? Either way, it's had a really big long-term trend, man. I mean, this thing has been downtrending since 2021. Like, it was at $76 a share in August of 21. It's at $15 a share now. That's looking pretty rough. It's also a retail store, and I just never invest in retail. Brick and mortar retail is sketchy right now, I think. Yeah, well, bond yields are definitely causing this dip too. I'm pretty sure you can camp. I would check with them, but I'm pretty certain you can. I trade the micro E-mini and regularly. I'm pretty sure CL. You could trade CL, which is oil, on Top Step for sure. I'm pretty sure at least. I would ask them, but I'm pretty sure. Here, check out the link if you want. I'm pretty sure oil is /CL. Right now it would be /CLZ3. You know, I'm pretty sure is what it would be, but I'm not 100%. Yeah, looking at the E-mini here. Man, back testing that reversal market oracle thing hasn't been working as well. But I mean, it still works more than it doesn't work. Is this music too hyped for me? I think it might be. It's a little bit too hyped for me. Which is bullish. We don't know. We can only speculate. What I will say is more jobs is bad, right? So I think higher non-farm ADP data is bad right now. Market's just been going down on higher job numbers like yesterday. Hmm. All right, team. I was thinking about buying this dip on the SPY. I just stopped myself. Tesla bouncing up a little bit too at 247s. Watch Nvidia though, guys. Again, Nvidia's down just heavy. Again, ADP is expected at 153,000, right? 153,000. We still got about an hour. If Jolt's data came in higher, won't this come in higher as well? Not necessarily. You might think that even with like, oh, this is the prelim payroll data, right? So a lot of people think that since if this number comes in high, that the payroll numbers on Friday must come in high as well. And that's just not true. These numbers can come in anything. And then Friday can be wildly different than these numbers. You know, a lot of people look at this like that, but it's just not, it's not a big predictor, to be honest. It varies a lot, I guess. Yeah, it sounds like a Mario song or something. Mm. Yeah, so again, we got Tesla ripping up a little bit. We'll see if it drags the market up too. All right, team. We're watching the NASDAQ here. All right, look at Tesla rise. NASDAQ starting to rise up a little bit too. Let's see if the NASDAQ follows suit here. I'm trying to be patient. So I'm in the NASDAQ short right now on my funded account. And so we're going to try to make a little bit if we can. If not, it's all good. We need to catch a breakdown here on the NASDAQ. We're flat in the trade right now, up a little bit now maybe. There we go. Beautiful. All right, just locked in some profit. Building up that cushion on that NASDAQ account. Is it possible to get funded in Top Step in 2 days? It is. It's very difficult because, okay, so, but it's possible. Like, it's certainly possible. A lot of people have done it. But basically what you do to get funded is, like, so if you're on the 50K combine, I'm just going to use that as an example here. Yeah, if we're on the 50K combine, I'm just going to use that as an example. You can't make over 50% of your profit in one specific day, right? And so in the 50K combine, you got to make 3K in profit. And so what that means is you can't make over $1,500 in any particular day. But if you can get $1,500, and I'm pretty sure they give you a little bit of leeway with it. If you can make $1,500 one day and then $1,500 the next on the base combine on the 50K one, then you'll be funded in 2 days, right? Now, you can't go too much over it. You can't be too much underneath it. And I think they'll round or do some stuff for you, but I would reach out to them first. But yeah, that's how you do it, is you'd have to make $1,500 one day, $1,500 the next to get funded. Yeah, I mean, it makes sense why they have that rule, because if not, traders would just go really heavy size and then reset every time they needed to and get funded, and then, you know, not have to worry about it. Very nice bin. I'm using Quant Tower, but again, you can kind of see the SPY dip down. We shorted a little bit in the futures market. Again, you can kind of see my graph. I'm really proud of my graph here. Like, this is my graph on Top Step, right? So, like, here's my graph on Top Step for the last month. And again, you can kind of see, like, that's my Top Step. This is my actual funded account, right? So this is my actual funded account. So we got a 3.2 to 1 win-loss ratio on our funded account. So yeah, we're doing pretty well. And again, if you want to check out Top Step, link is in the description. It is a sponsor of mine, so I'm definitely biased in their favor. I always try to be honest, but they're just really nice for traders to learn. Man, I should have stayed short in the NASDAQ here, man. I made a little bit, but not a ton. I should have stayed short in it. What? I'm down? How am I down, dude? This can't be right, dude. Okay, yeah, there we go. I was about to say I had to reset it. So yeah, we're up. We're up like $40. About to say. All right, guys, again, bump that like button. We got 55 likes. We can do better than that. We get the non-farm data in like 45 minutes, too. And so, again, hit that like button. Hit the subscribe button. Hey, nice Yair. What's up, Han? Tesla target? I don't know, man. I'm not giving out targets. Nobody really knows. Like, targets are just made-up numbers that people throw out there based off of bias. I have no idea. I hope it goes up. I'm in it right now. I hope it goes up. Hmm. Hmm. All right, guys. So again, market's bouncing back up a little bit. I was hoping I was holding onto that short position, but I guess I just didn't. And market started to bounce back anyway, so it's all good. Yeah. So Sam Bankman facing 115 years in prison. Where do you trade? My office. Yeah, I mean, Nvidia dipping down a lot too, but again, we're flat. Maybe the market's waiting for this non-farm data. I don't know. Um, maybe the market's waiting for it. What do y'all think of like? So part of me thinks I should scale into micro e-mini positions and take longer term trades on futures with just micros for now. Maybe like the micro Nasdaq is what I'm thinking of. So that's kind of what I'm looking at right now to see if I can potentially do that. Let me see. Did I exit out? I think I did. Because like my job is like I'm almost there and I don't want to risk too much. Basically being like I'm funded already and I have 4 out of the 5 necessary green days before I can withdraw. And so I don't want to swing too hard before I get there. And part of me thinks I should trade micros and then build up a cushion and then take larger size afterwards. So we're in like a little micro trade. We're going to try out this. I know commissions are heavier now and we're now green on it. But I can be, the reason I'm taking this is because I'm short right here and I think we could be a little bit more patient too. And so if I'm trading the regular NASDAQ, I think I'll probably only do this specifically with the NASDAQ because the E-mini moves slow enough to be okay with it, right? All right, so we're green here. We're just going to let this work, I think. Like I said, taking long-term trends. Yeah, it does cost more fees. So basically every morning you guys just watch the market to see where it goes. What do you mean, Eduardo? I'm not sure about TLT price. Those are futures, right? Treasury bills. All right. Correct me if I'm wrong. Those are treasury bills, right? Well, I mean, we cover market data. We cover economic reports. We report on earnings. Like we cover a lot of the market news. We just like, listen, most people giving out predictions are full of crap, right? They don't actually know anything. And they're just kind of telling you either what you want to hear or what will get the most clicks. And, you know, that ends up manipulating a lot of new traders, a lot of new investors into thinking a specific way about the market. And again, I would rather just not make any crazy bold predictions and just be real with people, right? Which is that nobody really knows. I promise you, this is what's going to happen. They're going to give you they're going to give you your prediction and they got a 50-50 chance of being right, up or down. If they're right, you're never going to hear the end of it. They're going to say it over and over again. If they're wrong, they'll just pretend they never said it, you know? Yeah, I mean, 20-year Treasury. I'm not really one to invest in this stuff, in the Treasury bills, especially the ETFs based around them. It's just not my style. But hey, do your thing, make your money. I'm not. I don't know about these. All right, guys, we got ADP data coming out in about 35, 40 minutes. We're also in a short of the micro NASDAQ right now. So we're in a short of the micro NASDAQ. Again, 2 baby contracts of the micro NASDAQ. The problem is Tesla's ripping up right now. And so Tesla's actually bumping up a little bit. Roblox still a trade? I mean, I'm in a call option for Roblox. It's a $30 call option, and we're right under 30 bucks. I'll probably let it wait for the next few weeks to see if I can hit my strike price in my options. I'll probably cut this NASDAQ trade. We're pretty close. We're down 26 bucks. Glad I took micros. I could add to it. Again, I don't want to get stuck in chop. I'm just going to cut this and wait. What time do you usually start streaming? 7 a.m. So yeah, I'm usually streaming at 7 Eastern. But yeah, Roblox, about $1.50. My strike price is $30 on Roblox, and I'm in it still. I got the option to sell it now for a loss. It's not the biggest loss, but I could sell it now and just get out for a loss. I'll probably give it at least another week and then unload it if it doesn't look good. I still think the odds are against me, but I mean, it's a $30 strike price, and so it could hit it. It's just close to it now, and we'll see. All right, guys, look at the SPY bounce. Tesla breaking pre-market highs. I think pre-market highs, right? Yeah, Tesla breaking pre-market highs, almost back up to 248s. SPY bouncing up a little bit as well here. So, what do you guys think? Do you think the market's going to bounce back today or stay flat? Again, we asked the voters here, does the market want higher or lower ADP non-farm employment data? 48% said the market wants higher. 36% said lower. And again, I think the market is wrong. Or I think the votes are wrong. I think this is wrong. I think the market wants lower ADP non-farm data. I think more jobs is bad, and it's going to be reacted negatively to. And so I think, I think the market wants lower non-farm data, not higher, because again, lower is better. If you look at how the market reacted to the JOLTS report yesterday, JOLTS numbers came in way high, and market definitely did not like it. Market dumped very quickly down from this report. So yeah, it really is all about the data. And again, the data came in very high yesterday, and the market did not love that at all. And so I think that's an important thing to understand. That's a big nuance of the market right now, which is that the market is very much so inflation fearing. All right. All right, guys. Again, very flat SPY. Sorry, I'm looking at the newest thing in poker is like GTA or GTO cheats. GTO in poker stands for Game Theory Optimal. But apparently there's solvers that there's like solver software that people are using, which is kind of funny. How could you stop that though? I mean, they could just use a solver, like a handheld solver. All right. Hey, what's up, GG? So say jobs are lower, the Fed pivots. What does that mean? Economy is broken and he bounces short term. I mean, jobs are lower is kind of what the Fed wants, though, brother. Like the market wants lower jobs. You know, and I don't know. I don't think the Fed's gonna like cut rates anytime soon. You know, I think inflation's still way too much of a problem to cut rates currently. Thoughts on the Dow? The Dow's interesting. I mean, I'll watch it. It's a little bit different. It moves a little bit differently than like the S&P and the Nasdaq. You know. But we watch it. Again, SPY's starting to move up. We're very flat right now. I think the market's waiting on this data. Again, bump the like button, guys. We got 66 likes. I'm still looking for 100 if we can. I appreciate it. Thanks so much for the love. Hit that like button, guys. We got 320 people here. Again, Tesla at 248. Rate hike 25 points. So you think we're going to raise rates? I don't think so. I'm pretty sure we're not going to raise rates. I mean, it's about, last time I looked at the votes, it was about 70-30. So last time I looked at it, it was like 70-30 rate hike, or 70-30 pause versus rate hike. So I still don't think we're going to raise rates next cycle in November. I think we might not raise rates this year. And then we start raising rates again next year, I think is what might happen. Man. Stealing from Walmart, man. All right, so SPY testing highs again. SPY started to push back up, break highs of the day. Right around there. So again, I'm glad I got out of my short. I'm usually pretty risk averse. I don't like sitting in positions very long. So we're kind of watching this, but the whole market's kind of sitting on the economic report coming out today. So the market's just kind of waiting. We had mortgage rates come out. I think they came in a little bit lower than expected too. Fed futures. What do you mean, Douglas? Dollar is dumping. Yeah. All right. Hey, 30 minutes still until non-farm data. NASDAQ rip it up. SPY rip it up a little bit. The dollar's probably falling down because the market's pushing up, and there's usually an inverse correlation with like markets and the dollar. Never really heard of him, Ray, to be honest. But yeah, never really heard of him. Yeah, we got non-farm employment data today, guys. It should be fun. Definitely been a lower volatility time in markets, I would say. Just less trading going on, less interest. But look at the SPY rips. The SPY over that previous level here. We'll see if we hold. All right, team. 25 minutes. 25 minutes. It's a big EV car now in Europe. Yeah, I never really heard of it. Do you think crypto will see the usual good October, or this year is different? I don't know. I think it's going to vary. I think crypto is very difficult to gauge right now, and a lot of crypto is based around news. And so the question really is whether the ETF, Bitcoin spot ETF, is going to start pushing towards approval, what that type of sentiment and decision results look like. That's going to influence whether Bitcoin and in turn the rest of the cryptocurrency market goes up. The problem with crypto lately has just been stagnation. It's just not really doing much. It's between 25 and 30K for a long time now. And again, I like crypto. I'm a believer in crypto, but it's been slower, lately. It's definitely not the crazy bull market we were in 21 when everything was running, and so it's just kind of settled down a lot. There's less crazy moves, less interest overall on it. I'm not saying it's done, but I just think it's. There's just less interest. I mean, to be fair, there's less interest in the stock market too. The SPY and other markets have been, pretty red too. So, Volvo announced the price of their new entry-level EX30 EV. It's about 36 to 42,000 for the single motor. And they got an all-wheel drive version. Do you think there's an actual formula for creating wealth, or is it just chance? I think it's a little bit of everything, right? Like, I think if you want to make money, like, here's the reality: you need a deep resiliency about yourself, right? Like they say the average person fails in 6 businesses before they succeed in 1. And that's absolutely true, right? Like, so the people that are usually successful either got really lucky and succeeded on the first try, which is, again, rare. Like, most people are not going to have that. Or they kept trying until something sticked. And again, that's kind of what happened to me. I just kept trying until something sticked. And but again, it varies, man. It varies. Business, it relies a lot on luck. Like, there's formulas to make money, but a lot of the time the person is not going to have the perseverance, pun intended, I guess, to actually stick to that formula consistently enough to make money. Unless there's a couple things. Like I always say, monetize your passions. Figure out what you like and then monetize that. That way it's not going to feel like work, and you're going to have the resiliency to keep pushing and doing it even when it's difficult, right? Because if you get into something that you don't genuinely enjoy, you're going to give up anytime it gets hard, and so your job is to stick with it and keep pushing. Yeah, Fed Reserve joined Instagram. October is National Economic Education Month. The month. Where's gold at? Like, gold dipped a lot. I see a lot of people talking about gold. We are getting a pullback. We got kind of like a double top here. But here's gold. Gold futures. Gold ripping up a little bit today. Still down, though. It had a pretty big dip. Here's a 10-day chart. Nasty 10-day chart on gold. Look at the gold 10-day chart. Yeah, Stellantis, I just don't know much about him, man. To say yes or no, I just don't know. Fed futures are not indicating any rate hikes. Yeah, I mean, I'm looking at the CME watch tool. Again, 70-30 is what it's showing, I think. Let me see. Last time I looked at it, it was 70-30. Is Michael Burry right yet? I mean, about which one? He said the market was going to crash in 2015, 2018, 2020, and then 2023. And so, I mean, which prediction, No, but on a serious note, market is dipping down. I don't like the market right now. I think the market looks rough. I mean, it's still very green on the year. Like, to put it into perspective, the SPY and S&P are still green about 8% this year still, even with the latest drop. So in 2023, we're still up a pretty heavy amount. But yeah, the dip is definitely not looking good. If that's what y'all want to hear, dip's not looking. Dip is definitely looking pretty dippy. But yeah, look at gold, guys. Gold, man. Here's gold. And this is gold this year. So gold had a crazy start to the year. Broke highs, got up to almost $2,100 an ounce. Dipped all the way back to 1840s. Is it time to buy the gold dip? Is the question. Is it time to buy the gold dip? I don't know. We got about 20 minutes until the non-farm employment change data. It's the prelim data. Then later on, we got services PMI dropping. Yes, I did. I took profits on Netflix when it ripped up. I'm still holding a piece, but I did take most of the profit off there. Successful people learn to get comfortable being uncomfortable. That's the formula. I think, like, what I've noticed about most successful people have a chip on their shoulder. Like something happened in childhood to make them incredibly competitive or incredibly stubborn. And those are all good things for business. Sometimes, most of the time. Steve Jobs was adopted and felt inadequate because of it, and then used that to push and build the largest tech empire, one of the largest tech empires. You know what I mean? And so I think, yeah, but Shreep, I hear people say that. I also hear a lot of people saying that Burry was net long, and that trade was just a hedge. I heard a lot of people say that. You know what I mean? And so, again, what I'm trying to say is, like, I get it. Burry might be telling people what they want to hear. And they're preaching to the choir to some people, and that's okay. But we don't really know what Burry's positions were. And that's the thing you really want to understand is, like, we don't really know what Burry's positions are. All right, NASDAQ finally pulling back a little bit. Gold dipping down too. So let's look at the SPY. Costco is selling cheap gold. Yeah. How much will this news affect the market? I'm not sure. We'll see. Yeah, is it time to buy now? I don't know. Again, I really don't know. SPY looks green today. I mean, we're up to 422s, 423s on the SPY. You can see Tesla starting to dip down. Again, NVIDIA fell down to about the 430s. And NVIDIA is a big influence. Tesla, again, as you can see, Tesla at about 247.50s. Tesla didn't have the biggest red day. And so, Tesla still could be doing worse in all this. Yeah, I feel you, Polaris. Maybe so. Again, I'm in gold long term, but not short term. Again, bump that like button, guys. We got 88 likes. We could break 100 real quick. Come on now. Do it now. Yeah, I mean, dollar cost average is I think your friend right now. Again, for me at least, I think DCAing makes perfect sense. But everybody's a little bit different. But I think DCAing right now is probably time. But again, who knows? I might be wrong. Just be smart. The market can do anything and whatever it wants. If non-farm is higher, dollar strengthens, market weakens. Oh, 100%. Yeah, it sounds like a terrible investment, king of all kings. And again, look at the long-term chart. Look at WHLR. Just to bring attention, like people always talk about these penny stocks. And again, if you find yourself as a long-term investor into these penny plays, you want to stop, take a step back, and think about why. Again, most of these companies are the worst companies in the world, right? Look, here's WHLR, Wheeler. Look at the chart. Look at this long-term chart. Look at how bad this long-term chart is. It's a post-split chart too. And so again, like a lot of people, they get wrapped up in marketing. And it really is just marketing, right? Like if you're a little company, you got to market to shareholders, making them think you're more successful than they are to talk people into buying your stock, right? And then you get a bunch of YouTubers talking about this penny stock's got 1,000x, just buy it, right? And like new, naive, young investors who don't really know any better invest in them, right? And most of the time they just end up going to zero. And again, a lot of the time, they'll bag hold it and they'll just go to room pumping it. I don't know if that's what's going on here, but just again, just be smart, guys. Like, don't get stuck trading or don't get stuck investing in penny stocks. Like, they're terrible companies. Like, I don't know how many times, and again, I have a very different perspective because I've seen so many different penny stocks get pumped. I've seen so many people come to my room and say, buy this penny stock or buy this penny stock or buy this penny stock. Virtually none of them have actually gone on to be successful penny stocks. Virtually none of them have actually been good companies. And so there's much better ways to invest your money than crappy, terrible penny stocks. And I think a lot of it is gambling as well, where people, they think it's like roulette, where you put a little bit of money in and maybe you hit it big, right? But most of them are just terrible. All right, Google up a little bit. Google didn't have the worst day. Dollar cost average in simple terms. Dollar cost average is taking periodic buys and averaging into something over specified intervals and periods. So like an example of a DCA strategy would be like, hey, I'm going to buy the SPY and I'm going to buy 25 shares every month for the next 2 years, plan to hold it for 10, right? That's a DCA, dollar cost average strategy. It just means you're averaging in to a position over time in specific intervals or time frames. Okay, so why are y'all spamming the same thing? Y'all are weird, man. What will be move? All right, guys. Hey, we got 13 minutes. 13 minutes. Yeah, and I hear the thing about all these large cap stocks once being penny stocks, right? Like I hear this all the time. And again, I'm not against your hustle. You know, it's all good, brother. But like, okay, let's take a look at Apple. Yeah, so Apple, you know, in the early 2000s, it might have been a penny stock. But again, like imagine how many penny stocks there's been out there, right? And then imagine there's maybe 3 main stocks that were once penny stocks, right? AMD, Ford, and Apple, you know. Every other penny stock basically failed. And so again, you can try to catch the next Apple. Understand, back when this thing was pennies, inflation, like a dollar or two back then was much more than a dollar or two now. You know what I mean? And again, I'll say this: Apple never had a chart that looked like this. You know, like Apple never had this type of chart. And so, you know, a lot of the time people just take terrible companies. And again, like the problem is confirmation bias, right? It's where people like they spend so much of their money investing in these things, and like they get like some people are just more gullible, I guess is for lack of a better word, gullibility, if that's even a word. Some people are just more gullible. It's easier to talk them into things, right? It's easier to sell them on conspiracies. It's easier to sell them on, you know, why you should buy terrible penny stocks. This one penny stock's different, they're going to say, right? It's just easier to do that with some people, right? And then when a lot of those people get wrapped up, they just get stuck in it, and like they don't know any better, and so they're just kind of like turning into like the fanboy, the poster child of that stock. And like, again, what I would encourage is to be resilient against that type of stuff. Most penny stocks will fail, and again, you can invest in them. You're going to have better luck taking small size and putting it in a blue chip company. Like instead of buying 1,000 shares of a penny stock, you can buy 10 shares of Apple, or 10 shares of Amazon, and 10 shares of Google. And like you're over a 5 or 10 year period of investing, you're almost certainly going to make money doing that. Penny stocks is the very opposite. Like you could take a number of different penny stocks, and in a 5-year period, a large majority of them will be close to zero. So just be smart. That's what I always say. People come here and they try to talk about their penny stocks, and like usually it's a bad idea because I'm not gonna pump it up just because. All right, guys. Anyway, SPY testing highs of the day. Employment data comes out in about 9 minutes, less than 10 minutes away. Yeah, ADP is expected at 153K, but it varies. It depends on the analyst. Yeah, it's all good jetting. Yeah, Tilray earnings calls is at 8:30, but the earnings are already out. So Tilray earnings are already live. They came in less than expected for EPS. I think they lost 10 cents a share versus a 5-cent estimate. And then they had better than expected revenue, so higher than expected revenue. Chris says, over the next year, in your opinion, which way is the U.S. residential real estate market headed? Up, down, flat? Everybody is calling for a crash. I don't know, man. And again, I'm going to preface this with like, look, I'm a real estate agent, but I have no idea what the residential real estate market is going to do, brother. I could guess. I think that commercial is in for a rough ride and has been. I think commercial is really in trouble. But I think that anything could happen. I think prices for real estate are very high, and so I think the market probably is going to correct back down some more, and I think prices are going to come down, and hopefully interest rates are going to go down too. But I'm not sure, to be honest. I appreciate the donation. Thanks so much. I'd rather be honest about it and just say I don't know, because I really don't. And as a licensed real estate agent here in Texas, it gets kind of tricky giving away advice on that stuff. So again, I'm just going to say I don't know because it's safer. Again, I could see the market coming down a little bit, but I have no idea if it will. I think prices are still very high. I think the average mortgage is so expensive right now. Mortgage brokers are struggling. Real estate agents are struggling. I don't know. Most of my business isn't done in real estate. I have my license just for ish and giggles, but most of my business isn't done in real estate, obviously. All right, guys. Again, SPY dipping data 422s. I don't know how much this non-farm data is really going to influence things. Yeah, again, commercial's in the biggest trouble, right? I don't think residential's in that much trouble. I think residential's still going to go up over time, but I think investing in commercial real estate is a terrible idea right now. I think commercial is on its way out. Most people are working remote. You don't need to stick a bunch of people in a warehouse and pay massive rent checks every month to your landlord. And so in that regard, most people are just going to be, I think businesses realize that remote work gives them much better margins versus putting people in housing. And so I think commercial is really in trouble. I think investing in commercial, leasing commercial right now is incredibly risky. The real estate market right now, what it's really facing though, and again, I don't know, I'm going to preface everything with I have no idea what I'm talking about. I might be wildly wrong about anything or everything. I'm not a real estate professional. But the interesting nuance of real estate right now is this. A mortgage is so much more expensive right now than renting the same property, right? You can rent a property for $1,000. Your mortgage is going to be $1,500. And so right now, owning a property, paying a mortgage on a property is more expensive than renting said property, And so that's a very different nuance to the real estate market than we've seen lately. Or we've seen it for the last year, but that's very different than the last 20. And so what does that mean? It means less people are buying houses. Less people are getting mortgages. And with interest rates so high, it makes sense. Yeah, but I mean, I'm a YouTuber that also has my real estate license and does real estate. But again, I'm going to be honest and just say I don't know. Appreciate the donation. All right, guys, here we go. We got 5 minutes. 5 minutes. We'll see what the non-farm data shows up as, man. I'm ready for it. We'll see if it's good or bad. What's up, Tobias? We can get a smaller house for more money. Yeah, that's the sketchy part. The real estate market's in shambles. I will say that. Eventually, a correction is going to happen. Yeah. Well, renting is not bad. It's cheaper to rent right now than it is to buy because of mortgages. But if you can pay cash, you can probably get some good deals right now too, though. Thoughts on Palantir? AI related. Moves a lot with NVIDIA and other microchip stocks. All right, guys, 4 minutes. 4 minutes. Yeah, definitely top 3 best realtors ever. All right, again, market's very flat, though, heading into this report here. We got very choppy action into all this, man. Market's just super flat. Kevin O'Leary paid almost $16 million for 20 service hours, 20 social posts, and 50 autographs to promote FTX. Bro, freaking Sam Bankman-Fried's just being dumb with money, bro. Just being dumb, dude. You're going to pay Kevin O'Leary $16 million, bro, for freaking 20 social media posts and some autographs, dude. What are you thinking, bro? Bro, sign me up, dude. Give me a time machine. I'll go back in time and promote you, bro. 15 mil? What? Everybody's like, no, I wouldn't do that, bro. 15 million, that can heal a lot of wounds here. Let's just be real for a second. All right, guys. Hey, we got 2 minutes, 2.5 minutes. I have no idea how gold's going to react. I'll tell you this, though. If the non-farm employment data comes in high, it's probably going to make the market drop. We don't know for sure, but if the non-farm data comes in high, market's probably going down. If the non-farm employment data comes in low, market will probably like that report. But again, we had jolts yesterday, and the market reacted incredibly negatively to the jolts report. We dropped down drastically from the jolts report. And so, yeah, I mean, again, realistically, the market is probably not going to like it if we have more jobs than expected here. And so that's the nuance I would watch. And again, you can see the expectations are 153,000. And again, we're going to cover it quick. Hit the sub button, hit the notification bell. We got less than 2 minutes here until this release. 2 minutes. Give me your numbers in chat. What's your guess for non-farm employment data? And then we also have services PMI. Is that because less people who buy cheaper homes usually have less money, worse credit, so they're likely to default and can't get loans and or cash buys? It's because of interest rates, Chris. 8% interest rates right now in mortgages, right? And so that's going to make your mortgage payments much more expensive if you think about it, right? So if you're paying 8% interest, that's very, very high. Very, very high. And over the last 20 years, the standard has been 2-3%, right? So we are over 2x what it's been historically over the last 20 years. And so number one, buyers are spoiled right now. They don't want to accept 8%, and they're not going to buy as much. And that's, and then number two, if they do buy, they're going to get eaten in terms of mortgage payments, and again, we got less than a minute. The normal drive for people to get a mortgage and buy a home versus rent is that they're usually going to pay less in rent, or they're going to pay less in mortgage payments than they are in rent, right? So they can own their home and pay less for it. That's usually what brings people to buy real estate. Right now, you're going to pay more money to mortgage your house. You're going to pay more money most places to buy your house versus rent. You're going to pay much less rent than you would mortgage. All right, guys, here we go. 20 seconds, guys, 20 seconds. Hit the live button next to the play button. Make sure you're fully caught up on stream. We got 20 seconds. Again, you want to make sure your live button looks like this. And then here we go. You want to make sure it's red. Here we go. 8 seconds. Let's see what the data comes in at. 89,000, way lower than expected jobs data. 89K, way lower than expected. 89,000 versus 153. Basically, way lower, 50% lower, basically. Way lower jobs numbers, and this is ripping the market up. The market loves this. Again, I told you guys, if these numbers came in low, the market would probably love it, and the market has so far. 89,000 versus 153,000 expected. 89K, which is way lower than expected. This is a great sign, honestly. The market kind of needs it. Hopefully, this signals payroll numbers coming in light on Friday. Hopefully, that's what this signals, but we'll put this number up on screen. Way lower than expected payroll numbers. 89K, market is loving this. Rip it up huge on this data. Not a shock. Again, way lower than expected numbers. 89K, market is popping up to 423s, breaking highs. Tesla breaking up as well. You can see other large cap stocks also move up. And again, after yesterday's big bear action, the market kind of needed this. What does that mean? It means less people working. And again, if you look at the JOLTS report yesterday, JOLTS report came in much higher than expected, signaling more working, which means, again, the reason the market doesn't want this, more work, right? The reason the market has reacted positively to this, okay, is because more people working means more people spending money. When more people spend money, inflation gets worse, right? The market does not want high inflation. The market's scared of inflation right now. And so with that in mind, in that regard, the market wants less people working, right? And what the non-farm employment change came in at, it came in what? 40% lower than expected. And so it came in about half of what was expected. And so again, 89K versus 153K. So again, much better job numbers in a lot of people's minds. Much better job numbers in a lot of people's minds. So 89K, Again, it came in about 60% lower. I'm sorry, about 68% or 60% lower than expected. And so that's much better, much better. Now, again, the SPY starting to dip. This signals less people working, in turn, less people spending, in turn, less inflation problems. That's the logic of this reaction in markets. But it doesn't mean it's going to hold. And to be honest, it's not the biggest move. Like I know I described it, oh, the market's ripping up, and it did. But this isn't a huge move. I mean, it's a good move. It doesn't look bad. But the question now, since it's the question now is this going to hold? Is this going to hold right now? And again, I don't know. Will it hold right now, guys? Let me know what you guys think. Doesn't lower employment mean more inflation? No, it's the opposite. So again, you got to think about it in terms of spending, right? In terms of spending, okay? More people spending is what? It's bad, right? Why is it bad? Because the more people spend, right? Think about it like this. If you're a business and you're selling packs of gum for $5, I'm just going to use this as an example. If you're selling packs of gum for $5, right? And you're selling out the shop. You're selling out every time you put packs out, they're flying off the shelves, right? You're making money. Are you going to lower prices? Of course not. What are you going to do? You're going to raise prices. You're going to say, hey, well, we're going to bump it up to $6 because people keep buying it. We're selling out. You know, supply and demand, we're going to bump that up to $6 a pack, right? If that flies off the shelf, you're going to bump it up to $7. And you're going to keep doing that until, you know, you find an equilibrium there. That is why more spending equals bad right now, is because more people working means more people spending. More people spending drives prices up and ultimately does worse for inflation, you know, is worse for inflation, right? Causes more inflation problems. That is why this caused a positive reaction in market, as well as the reason the JOLTS report yesterday came in low, or no, that's why the JOLTS report came in high yesterday and the market dumped down, is because the market is very, very obviously fearing inflation. So more spending is bad. More spending equals more inflation problems. Hold on, bro. More spending is bad. No, not before school.
Oh, I'm staying home for like a while.
Okay, for a little bit you can. All right, love you, buddy. Sorry, my door is broken. And so my door is broken, so if it sounds really loud, I'm not like breaking it. I gotta like put some WD-40 on that thing or something because my door is just not working that well. But yeah. Anyways, the market does not want more spending, right? So again, it's got to the point where the nuance of the market over the last year has been very interesting, because it really is something in which the market wants higher unemployment, less spending, lower payroll numbers, less economic growth. Why does the market want these things? Why does the market react positively to these things? It's because the market fears inflation. Market fears spending. It fears prices increases. It fears price increases, right? So the market is fearing inflation. It's fearing prices. It's fearing economic growth to a certain extent. And in that regard, you know, the reason the Fed raises rates, right? We talked about this. And with that said, the market's starting to turn. So again, I told you guys this wasn't the biggest move up. And the question is whether this would hold. And again, we do have services PMI data coming out today, the big ISM services PMI data later on this morning. And then that's a pretty big relevant release that you probably want to pay attention to as well. But again, to give you guys some procedure of economic policy and how it works, the Fed raises rates, right? When you hear people say raises rates, they raise rates 25 basis points, all that stuff, right? What they're saying is that the Fed is raising the federal funds rate. When the Fed raises the federal funds rate, it makes banking more expensive because of bond prices mostly and how that influences banks. So by raising the federal funds rate, banking becomes more expensive for the banks, right? And so what do the banks do to compensate for that, for those worse margins, is they raise interest rates to consumers. When they raise interest rates to consumers stop spending as much, and in turn, eventually businesses must thus lower prices to compensate for it, right? That's why you raise rates. That's why the Fed raises rates, is to discourage spending indirectly. That is why, you know, more rate hikes short term can cause short-term pain in markets. Like a lot of the time, more aggressive rate hikes short term will cause negative reactions in markets and vice versa, because it means less spending. But with all that said, when inflation problems are really bad, the market is just fearing economic growth, right? So in that regard, you know, over the last few years, The market has at times reacted negatively to higher GDP. They wanted lower GDP growth. They wanted less GDP growth. They've reacted negatively to lower unemployment. They've reacted negatively to conventionally good things, the conventionally good things that the market tends to want most of the time. But if inflation's really, really out there, really, really high, and the whole world's scared of it, that can skew the reactions to this stuff, if that makes sense, right? I hope that makes sense. Anyways, if you want to check out Top Step, again, we've been day trading today. Great way to learn how to day trade. And you can day trade essentially the SPY in futures. There's no PDT rule. You can day trade short, buy market, buy bid, sell the ask. You can see we've been trading the micros a little bit today. But you can see you can buy market, buy bid, sell the ask, just like stocks, but there's no PDT rule. So I can day trade the NASDAQ, which is basically the Q. I can day trade the E-mini, which is basically the SPY. With no PDT rule, I can look at this, but there's no PDT rule. And again, Top Step's the most legit futures funded program in the world. They give you a demo, they test your skill. Just taking the challenge builds your skill. And so if you want to find profitability in day trading, a funded account program is probably where you want to go. Because again, number one, there's less risk. The base one on Top Step's $49. If you lose, it's not the end of the world. But if you're good enough to pass it, and they're going to give you a demo, test your skill. If you can hit the target on the demo without hitting the max loss, they're going to test you. And just take it and build your skill. But if you can pass it, they fund you between 50K up to 150K with a 90% split. They're the most legit one in the world. They pay out millions, fund thousands a year. And again, the patterns in futures, in at least the E-mini and the NASDAQ, are very similar to large cap patterns. And so it's kind of exposure to day trading stocks with less risk and with less money. And so if you want to check it out, great way to help support the channel. They are a sponsor of mine. I'm definitely biased in their favor because they pay me money, but a great way to learn how to day trade. Again, they pay out millions in actual withdrawals every year. They're the most legit one in the world. You can check them out right there. Inflation is too much demand for too little supply. Yeah. What's up, Mr. Charts? Are you Todd? Yeah, we're funded on. We got funded on a couple accounts. All right, guys. Hey, non-farm employment data is out. 89. Okay, got you, Todd. My bad, dude. Chipotle now began testing bowls and salad making robots. Fed now. Yeah, the whole thing about McCarthy and all that stuff, man, is crazy. I'm not saying it's good or bad, but interesting for sure. Yeah, I'm reading this now. We just need age limit on politics, man. Like, nobody over 85 should be a politician, bro. Like, on either side. Like, I'm not really rooting for one side. I just think that's very obvious. That's something that's very obvious here. You know, I think it's a very self-evident thing, but for whatever reason, like, people find a reason to disagree. But all right, guys. So again, a lot of people said the Sam Bankman trial starts today. We do have services PMI data come out. Now, 55 is too young. I I would say 65 is okay to that too, but it varies. I think too young and you got problems on that end as well. All right, guys. Again, Sam Bankman free trial is supposed to start today. I'll stream it too if we can. Hmm. 5-minute chart trends were largely. Yeah, term limits is probably good too. I don't know what this song can be called, the bubble song. Again, guys, we got services PMI coming out later too, man. All right, team. Yeah, one of the things I've been using a lot today. And again, it'll be fun to watch what the market does here. Market's definitely been interesting. Again, we got services PMI coming out today, right? So, big day. We're also taking a trade on Top Step right now. So we're trading the micro E-mini right now. This is our funded account. And so here's the micro E-mini. We're just taking a little short position based off of this. I know the payroll numbers came in better, and we might add a little bit to this as it pops up. We're pretty much flat on the day. I thought I clicked it. Maybe I clicked the middle. I thought I clicked another buy button or a short button, but I'm trying out the micro a little bit today too. Let's see. Oh, it's my funded account. I can't take over 2 positions. I forgot. Even on micros too, I completely forgot. I can only take 2 positions because it's my funded account. I don't know if they're going to affect the market more than ADP. I'm really not sure. And so, yeah, I really have no idea if they're going to affect the market more than ADP. The only problem with shorting right now is because I think yesterday the market is extended on the upside. I think the market's up right now a lot. Or I think the market's down a lot right now, right? And so I think there's risks in going short right now, but we're going to still try it out. We're going to take this longer term short position in futures here. Yeah, the Astros game coming up on Saturday. I'm ready for it, man. I didn't catch the wild card games or what happened. And if the Twins win, I'd like to see Correa versus the Astros. All right. Hey, there we go. Beautiful drop. We're going to take a long-term short position here, though. So, again, we're going to take it a little bit longer. Who won versus the Rangers? right, so the Texas Rangers defeated Tampa Bay 4-0 in Game 1. Game 2 is at 3:08. Twins defeat the Blue Jays. I'd love to see the Blue Jays, though. I like one of my daughters and my favorite player is Vlad Guerrero. Vlad Guerrero Jr. Vladdy. He's one of my favorite players, man. So I kind of hope he makes the postseason. But I also wouldn't mind seeing Correa on in the postseason as well. Phillies, I don't really want to see them, and I like Bryce Harper, but yeah. All right, so again, we are short here. Trying to take this trade. Again, we're in Tesla. Again, we're short in this position, but it's a micro position. And so again, I really do want to give it a little bit longer and wait, take a longer term short position here. And if it turns against me, that's okay. We already got a little bit of cushion on the day. We're kind of flat, honestly. We're up like $15 prior to this trade. And so even if this turns against me and goes up, we'll still be all right. But I want to give it time to really break down a little bit longer. I feel like if I take micro positions, I should let the trade work longer. I can scalp with higher, with regular E-minis instead of the micros. But if I'm taking micro positions, I need to just let them work a little bit longer. What do you guys think? Again, guys, remember, you can try out Chart Prime for just $1 too. Like one of my other sponsors is Chart Prime. And again, you can kind of see how powerful this is. Like I've been having like a series on back testing Chart Prime. And again, like what I challenge you guys to do at home is, number one, there's so much different stuff. Like, look, you can see this rising wedge, and look at how accurate that wedge is. And like, look, if you buy the bottom, sell the top, look at the reversal down, big breakdown. Look at the reversal up, big breakout, right? But the one I've been back testing, again, I'm gonna be like, I'm like a broken record with this, but it truly is powerful if you look at this and you really look at like, okay, look, so watch every time an engulfing candle and a reversal signal on the regular market oracle shows up. Look, here's one here, huge bounce. Like this is a 5-minute chart, so this is 3 hours of bullish action. Okay, look, reversal up, bullish engulfing candle, huge bounce, really all the way until the next day. And we can keep going here. Look, it's great at calling the tops and bottoms. So like, look at this reversal down and an engulfing candle, huge drops. This is for like days of price action too. Again, this one could be considered wrong, maybe, but that's like what, one out of multiple. Again, here's another one, bullish engulfing candle, reversal up signal, crazy bounce for like hours and hours. And again, like I challenge you to back test it yourself. Very powerful. You can keep going back here. Look, reversal up in a bullish engulfing candle, bounce. Reversal down in a bearish engulfing candle, drop. You can keep going back and looking at this. They have to show up within like 5 to 10 minutes of each other. Or maybe it's like 20 minutes. So they have to show up within 20 minutes of each other. Like, look. And so it can be powerful. Again, it works best on the E-mini, not the SPY, but the actual E-mini and futures. And again, I use it a lot with the chart. I use it a lot with Top Step. But again, it's a great way to help support the channel. So if you want to check it out, here is the link. You can try it out right now for just $1. You can try out Chart Prime. And what I just showed you is just a little piece. It really is. They have chart patterns. They have oscillators. A lot of people use their oscillators. And again, you can try it out for $1 for 2 weeks. Link is right there if you want to check it out. Correa wasn't being a D-bag, man. Correa was trying to get what he's worth. And the teams were being dumb about it. Like, again, based off of his numbers, he should have gotten much more than he did. And so he was just trying to get as much as he could. And you can't really knock him for it. Like, everybody's going to be like that, man. Like, everybody's going to want more money and go for it. They brought up an old injury from like years and years ago that hadn't given him trouble in years. And they used that as justification to pay him less. And so again, the teams work together to get a cheaper player. All right, so we're probably going to get ready to cut this position here. Luckily, we took the regular E-mini. And again, I think the problem with going short right now, well, there's a little correction. I think the problem with going short right now, again, is this. The market's just down so much. I think the momentum is going to be on the upside today. Probably going to cut this pretty soon. Again, we do have services PMI data coming out too. The big one is ISM data. Look at Tesla rip up. Well, they were going to pay him what he wanted, CT. They actually agreed to his offer, and then they got the physical done. And then they used that old physical because they saw problems with his leg, right? So they were going to pay him that. Actually, they were going to pay Correa, whatever it was. The Mets specifically were, as well as I can't remember the other team. I think it was the Mets, and then somebody else. But they were going to pay him. The physical came in, and then that's when they changed their price. So they agreed to the high price first. All right, so again, I'm trying to be patient with this. It's just a $25 trade. We're basically flat on the day if we lose here. But I do want to give it time to reverse here. The trend is obviously an upward trend, and I don't want to try to pick the top here if it's just too much issue doing that. So. Yeah, ADP numbers came out, and market initially liked them again. So that's probably what I'm trading against here in terms of this trend. Yeah, I'm gonna go ahead and cut it. It's just too much bullish action. I think the market's so down yesterday that the likelihood that the market bounces today is pretty high. But nobody knows. But again, we do have S&P services, ISM services PMI data coming out. We got one of them at 9:45, but the big one's at 10, the ISM services PMI data. We also have Bowman speaking this morning, crude oil inventories, ECB members speaking as well. Correct, Ruma. Right now, it's $49 for Top Step, $49. Man, I think I hurt my shoulder in jiu-jitsu yesterday, man. It's my traps, dude. My traps hurt. They've been hurting for like a week. They started to feel better, and now they're hurting again, man. Bond's still red. Well, the yields are up. The yields have been up a lot. You get equities is green. SPY still running up. And again, you can kind of see like the reason what you can trade in futures, you can basically trade the SPY. Like, look, here's the E-mini, right? I can also trade the, but yeah, here's the E-mini. You'll notice it's the same exact price action. Like, look, these are like mirror images of each other. They're different prices because this is technically the S&P 500 and the SPY is an S&P 500 ETF. But again, look, so bounce, dip, bounce, dip, bounce, bounce, dip, bounce. Same thing. Look, or I should say bounce, dip, bounce, dip, bounce. Same price action. Dip, bounce, dip, bounce. Same thing. It's the same price action. And you can trade this left side in on Top Step. No PDT rule. I love all these predictions. I'm not really making too many predictions. I watch the 200 EMA very heavily, and here's the 200 EMA right now. I don't use the 200 MA. I use the 200 EMA, the exponential. But it's right around the VWAP. I think all of this stuff has pretty big support around these levels. All right, guys. Services PMI data. We had non-farm employment data. Services PMI data now. Again, the ISM is the Institute of Supply Management. Yeah, again, the ISM data is the Institute of Supply Management. They're expected for services. They're expected at 53.6. And to understand this, right, PMI is contracting versus expanding, right? So over 50 means an expanding market. Below 50 means a contracting market. And so they're expecting services sector to expand slightly at 53.6. Today, 53.6. We can also look at just the regular services PMI at 945. They're expected at 50.2. 50.2. All right, team. Let's see. Let me know if you guys think it's going to come in higher or lower than expected here. We'll end this poll. We got a bunch of votes. We got like, what, 700 votes on this poll. 44% think higher. And I told you guys it was wrong. Market wanted lower data. And that's what we got was lower data. And the market reacted favorably to it. Next question is, will services PMI come in higher or lower than expected? Vote on this poll, higher or lower. All right, so again, SPY still ripping up. Forming that, again, I think we got a little trend forming this morning too. So like, here's the trend. It's a 1 minute chart though, but like, I think the trend's pretty clear now. You know, the 200 EMA is close to the bottom of this level. So I think this is the trend that we got right now forming. Might be a little off, but I think that is probably closer to the trend. We'll see if we continue in this trend on the SPY. Tesla looking good. Where's Nvidia at right now too? Nvidia back up to almost 440s though. So I mean, Nvidia looks strong. It's at 439s right now. Could be worse. Yesterday's red action could be worse than it is. Retail sales in Europe worse than expected. Job report worse than expected. Economic downturn is here. Maybe that might be. If bonds recover today, the market will surge. If bonds continue to fall, flatten or drop. Yeah, probably. I found the NASDAQ bottom in the overnight session last night. I'm super long in the NASDAQ today. Hey, good luck. I hope the Marlins beat the Phillies. Yeah, Marlins. Aren't the Marlins like the second worst team in, the second lowest, smallest team in baseball versus the A's? I might be wrong. NASDAQ is 100 companies, but my point is that it's too volatile to use RSI MAC or any other trailing. It depends. I'm not sure what happens. I think the market looks pretty strong today, but it generally it flows through extension levels, right? So like The easiest way to explain it is the market, if it's down so much on one specific day, the bias is going to be on the upside the next day, right? So if the market dips really heavily one day, generally it's going to bounce back the next, at least at the opening bell. Not always, though. And so it's never 100%. Yeah, maybe it was the Royals. I'm always going to vote I don't know because I come here clueless. Hey, it's all right, bro. That's what we're here for. Again, the market's really interesting too right now. Yeah, I'm going to put on some older music. We've gotten some requests for that lately, so we're just going to throw on some older stuff. Tesla helping the market too. I mean, here's Tesla. Again, look at NVIDIA. NVIDIA breaking up. Apple is another big one today, and Apple's still pretty red. Apple's been one of the weaker stocks in the market. AMC, right around $8 a share. Google, pretty strong today. Walmart, up a little bit. Doesn't really move that much. The tech stocks are really the ones that move a lot in pre-market. Netflix, back up a little bit, but pretty red day for a lot of this stuff yesterday too. Microsoft. Yeah, Microsoft's been strong. Your speaker keeps cutting in and out. Does it really? Yeah, is my speaker cutting out? It's probably on your end. Probably lag on your end, I'm guessing, Neil. There was an article saying AMC price target $99. Honestly, bro. Honestly, at this point in time, man, at this point in time, people are using AMC as a tool to grow their social media profiles. That's all it really is, dude. And again, of course, the AMC holders don't want to admit that. And so they're going to act like all these conspiracy theories regarding AMC are legitimate. But dude, when you look at this, they're all completely unrealistic, man. Like, oh, this number was wrong and these synthetic shares, bro, nobody can prove, really, like without a cast of doubt, nobody can prove synthetic shares and naked shorts exist like fully. Like, yeah, we know they're there, but like how many of them are there, nobody knows. And using that as justification to say some crazy parabolic squeeze is on the horizon, it's just telling people what they want to hear. It's confirmation bias. It's just saying, hey, I saw another one like, yeah, bro, price target for AMC, $70. And it's just like, bro, y'all get out of here. Y'all are just telling shareholders what they want to hear. So, of course, the shareholders holding it are going to be like, yeah, bro. But it's like, I mean, maybe now AMC down here is interesting. It's super cheap relative to where it was. And I'm in AMC. I hope it goes up. I'm not hating on it. Like, I'm just being honest. At a certain point, AMC traders and holders and investors, they shouldn't like to be manipulated. Like, at a certain point, you should say, hey, people on social media, stop manipulating me. Stop lying to me, basically. But again, it's stuff that they want to hear. And so it's like somebody could come out and say, John, you're going to win the lottery today. And I might want that to happen. So, I might be like, yeah, that's true. But it doesn't mean it is, All good, BG. What's the symbol? If you got a symbol for bond yields, throw it at me. I'll look at it. All right, guys. Equities are doing really nice today too. Google specifically. Gold's still down so much though, man. Gold bouncing up a little bit today. I forgot I even bought Chewy. At least the market's kind of green. I guess that's what you want. TNX. Yeah, here's 10-year treasuries. So I guess like if yields are rising, this is going to go up because this is 10-year treasury. So higher yields means more people buying them, and that means this goes up, right? I just want to make sure I got the correlation here between this and yields. You actually trade the dollar index, Polaris? Yeah, I mean, I see it gapping down today, you know. I'm talking about just overall. Yeah, I mean, Polaris, you're actually going to buy the dollar index? Most people don't buy the dollar index. You're kind of like buying a dollar. That's kind of like paying $1 for $1, bro. Just buy the market, man. You know, it's going to do the opposite of what the market does anyway. Market's pushing up today. Dollar index is going down. If you look at the Dixie here. Yeah, bonds been popping up big. Over the last week or two, at least. 20-day chart bonds are up a lot. Okay. Yeah, got you, Polaris. Yeah, I was going to say, man, if you're actually buying the dollar index, that might be a little bit of a difficult thing to do. All right, guys, it's about to be 9 a.m. Tesla pushing up, dollar index moving down a little bit. Bro, my traps hurt, dude. My right trap. I don't know if my shoulder's messed up. Freaking jujitsu, man, hurts, dude. I think it's when I sprawl somebody's takedown. Like if they're trying to take me down, you wrap your arms around them and you sprawl. I think that's what catches it because ACL is your knees. It's bad, right? Yeah, I mean, I'm always a little sore, but my traps have hurt for the last couple, like last week or two. I mean, I still roll. It's not going to stop me from rolling, but yeah, I mean, again, SPY's still pushing up. We're in that trend still. I don't know if we're going to hold. This bottom trend line maybe needs some work. Is this live or was it filmed in September? This was filmed in September. You know, we are just predicting what you would ask me, you know, a week later, Ali, and you know, just kind of pre-recorded, you know, premeditated answers is what this is. Like, we're not actually live right now talking. This was pre-recorded, sir. So just to give you a heads up, everybody at home, you know, Peter, Justin, V, this is not live right now, you know. Yeah, ACL's definitely your knee. That's what I figured. All right, guys. Yeah, I mean, I know you could buy the dollar index, but all the crypto mining stocks are up. But where's Bitcoin at? I mean, Bitcoin. Yeah, I mean, it's doing all right. It's at almost 28K, but I would suggest an ear guard though. What, to avoid cauliflower ear? My ears hurt too, but I roll every day, so like my ears kind of hurt. But I definitely don't want cauliflower ear. Yeah, I mean, I don't think I rolled that much to get cauliflower ear though. Although I do notice my ears hurt after I roll every day. I roll 4 to 5 times a week, or 4 to 5 days a week, and so I'm sure if I keep it up, I'm gonna get cauliflower ear. I hope not though. On the plus side, it'll make me look like a badass, you know. All right, team. Trading the dollar index is hard. Yeah, I got the top 3 greatest ears in the world right now. All right, guys. Hey, dollar index falling down. SPY ripping up. Still in this trend. We'll see if we can break the trend. We still got 30 minutes before the actual opening bell here. So we still got a little bit of time left. We got the little baby trend. Again, we can look at like NVIDIA. There's Tesla. Tesla pulling back a little bit. Is it time to buy the dip? Here's NVIDIA. NVIDIA pulling back a little bit. Here's Apple. Apple dipping down some. Here's Microsoft. Microsoft up, but less volatile throughout the morning. AMD. Again, NVIDIA is a big one to watch. It got basically all the way up to 440s. It's been ultimately dragging the market up and down over the last couple months because of how extended it was on the upside. Like NVIDIA ran crazy high, pushed the bull market for 2023. And then when it started to correct back down, it dropped from like 500 all the way back down to 400. And that caused a lot of this bear action that we're getting. If you look at a 180-day chart, you can see NVIDIA was once at 520s. It has since dipped all the way back down to the 400 level, reaching lows around 408 back in late September. And so that really is what negatively impacted the market recently. Although NVIDIA has started to come back a little bit, since mid to late October or mid to late September, NVIDIA's had a resurgence back up. It's bounced from about 410 all the way up to over 450 at some points, and then recently dipped back down under 440. And so this is going to be a heavy influence over markets. It's going to be a big thing that a lot of traders are watching. I know personally, I'm definitely going to be watching NVIDIA to see, because it's a heavily weighted stock. I think it's number 4 in terms of weight in both the S&P and the NASDAQ, right? So it's just a heavily weighted stock that you want to pay attention to. You probably should pay attention to it. Tilray had earnings. And Tilray had mixed results, better than expected revenue, worse than expected EPS. And so they're gapping up, but it's not a ton. There's an operation to fix cauliflower ear. Yeah, I'm just not gonna do it. I'm just not gonna. If I start to see anything like that, I'll just chill out on rolling for a little bit. I think if they said all right, guys. So basically, to avoid cauliflower ear, I basically have to, like, my ears hurt, but like, I don't think they've hurt enough to actually have it yet. All right, so SPY's still dipping down some. Yeah, October's here. Well, you know, we're the top 3 most handsome traders in the world. We don't want to let a thing like cauliflower ear ruin that, you know. We do have ISM data today, though, guys. ISM services PMI data. We got like 40 minutes until that data drops. I'll put a timer up on screen so you can catch it out. But basic services PMI drops in like 40. Yeah, about 45 minutes. No, about 40 minutes. Sorry. We got about 40 minutes until the base services PMI data. Now, it's not the biggest one. The big one is the ISM, the Institute of Supply Management, non-manufacturing and service data at 10 a.m. So that's the biggest one. Again, hit the sub button, guys. Hit the notification bell. We appreciate it. Weird. What? Weird. Dude, Google Analytics is showing some weird stuff. It's like not showing me there it goes. There's back. Yeah, it's like not showing me this stream. It's good to see the Dixie having a red day. Yeah, I mean Dixie down is good for markets usually. Is this time to buy the dip in the SPY? We got the volume weighted average price like right there. VWAP's like right there. So is it time to buy the dip? I don't know. I might short this. Again, our job is to build up a cushion right now. New here, I'm using TOS and Quant Tower. So this is Quant Tower. It's me on Top Step. Top Step is a funded program for futures. They give you a demo and they test your skill. But you could basically day trade the S&P 500, like basically the SPY in futures. You could trade the NASDAQ in futures. You could day trade currencies, gold, silver. And the patterns are very similar to stocks. But there's no PDT rule, so you can day trade short. This is a platform called Quant Tower on the right. I like it a lot because it looks very similar to TOS. It moves in a similar way as well. And again, if you want to try out a funded account program like Top Step, it's the best way to learn. Like if you're a day trader, but maybe you don't have that much money, maybe you're struggling to really learn and you're losing money, a funded account program is incredibly beneficial for a lot of reasons. The main one is that it's just less risk than putting up the money yourself, but you're still working towards a funded account. You're still working towards profit in a real account, right? So like once you're funded, if you can pass their testing, once you're funded, they pay, they fund you between 50K up to 150K with a 90% split. Right. So it's very useful because it's the best of both worlds. It's less risk, but if you're good enough to pass it, if you're good enough to pass it, you still get a 90% split once you're funded anyway, and you get to keep your first 10K in profit as well. So in that regard, it's kind of the best of both worlds, but they are a sponsor of mine. Again, I'm definitely biased in their favor because they pay me money, and anybody would be biased in their favor. But again, I really think it's a useful way to learn how to day trade. I'm pretty sure you can use it outside the US, Eduardo. My stats on my funded account program have been pretty good too. Like we did have a losing day yesterday for sure. Still got 71% accuracy though. Market's trying. All right, so again, is the SPY bouncing off the VWAP? Maybe I took the opposite of the trade I should have. Again, the SPY right at the volume weighted average price. And so we're pretty much flat on the trade. We're down 15 bucks right now. And I want to give it time to really work. Yeah, that's a lot of work, James. I mean, again, you can open multiple accounts. Number one, you're not going to be able to short. You're going to be severely restricted in terms of buying power and equity. And so, I mean, you could try, but it's going to be a lot of work where in futures, there is no PDT rule. The futures market was originally created for farmers, right? Because farmers basically, they would grow crops. And by the time it came to yield those crops, the prices had fluctuated so much to where it wasn't profitable for them like they wanted it to be. And so ultimately, they started selling contracts, locking in the prices of their yields. And they called them futures contracts because they were betting on the future price of a commodity. Over time, though, that market has grown heavily to be where it is now, where you can day trade the S&P, the NASDAQ, gold, all these different things on the futures market with no PDT rule. And that's the big benefit. There's less red tape in futures. Yeah, I mean, you can create a new account in 2 minutes. You also have to fund the account, and then you can only go short, or you can only go long, which is a huge handicap. Like it's a huge flaw. Because again, if you understand anything about trading bias, right? If you can only go one specific direction, you're going to only see patterns in that direction. If you can only go long, everything's going to look like a long pattern. Just human nature, right? Confirmation bias, human nature. Like if you can only go one specific direction in terms of trade, you're just going to you're going to zone in on those patterns only. And so you're going to be blind to the short setups. You're going to be blind to the risks there, if that makes sense, right? At least in my opinion, but it's subjective, I guess. Well, I think if you want to day trade accurately, you got to be able to take both sides. You can't just take one specific direction, All right, so again, we're flushing down a little bit. Trying to build up a cushion on the day. We'll let it work and then get out break even if we can. If it goes against us, and if it continues to break down, great. We'll take profit. Again, I could take profit here and get out a little bit of gain, but I'd rather just let it work. It's a small trade, and we're flat on the day anyway, so. Buy the dip later on. Hey, good luck, dude. All right, guys, we got 18 minutes. 18 minutes. I'm already seeing the volumes a little bit better in October than it was in September. September volume is just garbage, man. Like, we just had nothing. It was boring. And so I'm already seeing that volume looks a little bit better this month than last month. All right, so we're short. Market opens up in 16 minutes, 17 minutes. Yeah, I feel you, James. Most of the time I trade regulars. Like most of the time, like again, here's my P&L in this funded account. This is my actual funded account, right? So um here's my P&L in the actual funded account, right? And this was mostly done by trading regulars, regular E-mini, regular E-mini NASDAQ, regular E-mini S&P. Um, and so it was mostly done by trading regulars. I have to wait for the chart to load. It's a little slow. But yeah, so we made our money and it was mostly, again, yeah, so here's the chart. This is my over the last month. This is my P&L chart. So again, people can say whatever they want. This is my actual funded account as well. So this is my actual funded account. We've had a good little time building up a cushion and building up some strength here. But most of this was trade regular E-mini, not micros. I'm trading micros today because I'm one win away from the $200 plus win minimum to withdraw. And so, you know, we might withdraw just because we can. All right, again, we're sideways here. Trying to give this time to break down. Here's the Donald Duck song. Somebody asked me about what it was, and apparently it's called It's Okay. By Superintendent McCupcakes. What a name. What a guy. What a name. All right, so again, we're green here. 15 minutes, less than 15 minutes until the open. Very hard, I think, now market to flush. It can do like a few days. But we are already at extreme fear and retail short. Technicals don't really matter for me if they say bear. Yeah, I mean, I think technicals are important and all, but I think what's going to matter the most over the next couple weeks is going to be the economic reports that we have coming out. Okay, so like just to put this into perspective, so this week alone, right? Today we had non-farm employment change data early. Later on today we have PMI data. After that, tomorrow we have jobless claims, which all might influence the market, right? And then Friday we have unemployment in the actual ISM in the actual ADP non-farm payroll data on Friday. Those are going to be big influences. Like today, you might think today was big. It's not. All right, so we're going to go ahead and lock in a little bit of profit finally on this trade. You might think today's report was big. Friday's going to be much bigger. JOLTS report early in the week, but Friday we have the actual payroll and unemployment numbers. So today was just prelim ADP numbers, right? But again, we do have the actual payroll numbers Friday as well as unemployment numbers Friday. And so, yeah, we just got a lot of stuff to cover. And then next week is even bigger than this week, right? So this week we got ADP non-farm payrolls and unemployment as well as jobless claims over the next 2 days. But next week, we got CPI, PPI, the FOMC minutes report, bank earnings, and the start of earnings season next week. It's going to be a huge week for markets. I'm excited for it personally, but that's what's going to influence it. Technicals aren't going to mean anything when these reports come out. If CPI comes in high, market's going to dump. If CPI comes in low, market's probably going to rip. And again, we don't know for sure. This is all just speculation. But if CPI, which is inflation data, it's the consumer price index, it's the most heavily watched inflationary metric the Fed looks at, I look at, retail traders look at. The Fed actually prefers PCE data, but that's a different topic. But the point is, CPI next week is going to be an incredibly watched report. Drops at 8:30, I believe, on Thursday. What's also interesting about next week is that usually the procedure of this is that CPI comes out one day and then PPI comes out the next. right? But next week, PPI comes out on Wednesday, which is strange. And then CPI comes out Thursday, so it's backwards. So PPI comes out first, and then CPI comes out second, which is very strange, very different than normal from standard procedure there. So again, very strange, very strange. But that's next week. We also have the FOMC minutes report. We also have earnings. Very busy week. But that's going to influence everything else in the market. So again, all this stuff going on right now doesn't really mean a lot, right? What matters more is what happens with regards to CPI, PPI, and earnings, as well as unemployment and payroll numbers at the end of this week. Technicals don't mean much right now because, again, fundamentals are going to trump technicals, right? You get people that are really into technicals, and I get it, but fundamentals are going to be more influential over short-term markets than technicals ever will be. The reason for that is because, again, technicals are great, but you can have the best triangle pattern, the best flag pattern, the best breakout pattern ever. And if CPI comes in super high, the market's going down, regardless of that technical pattern. Same thing with PPI, same thing with, most of this economic report. If the FOMC meeting, we could have the best technical pattern ever, but if the Fed decides to go outside of expectations and raises rates more aggressively than anticipated, market's probably dropping. And so in that regard, fundamentals short term are going to trump technical patterns. And so technicals mean stuff. Like extension is specifically what you want to pay attention to, in my opinion. Like you want to watch extension right now. But we got a lot of economic fundamental releases over the next few weeks. And so that's just a big thing you want to pay attention to. Yeah, nothing matters. Nothing else matters when fundamental reports come out. Yeah, the JOLTS report dumped markets. Very big reaction to it, too. It's kind of what's cratering the market right now. So JOLTS report just slamming down the market here. Just slamming it down. All right, guys. So, all right, a short position still going well. Again, I wanted to give it time since we are trading micros. I could just be patient with it. We're pretty much flat on the day now. I'm going to go ahead and cover this just because we can. And again, we're basically purely flat on the day now. So, and one of the reasons we caught this, again, chart prime, look at all the engulfing candles. When I start to see this type of pattern here, right? So this is chart prime, again, trading view indicator service. You could use it in stocks, crypto, Forex, futures. When I start to see all these engulfing candles and the reversal signal, usually we get a really nice short. And that's what that short was based around. Even though it was a smaller trade, I think I need to take smaller micros for stuff like that. But that's where I got the idea from, and it worked. It worked really well. So we'll take it. Flat heading into the opening bell. We'll see if we get some good stuff now. No, most of the time the JOLTS report's not moving markets that much, man. So again, it varies though. It really does vary. Like sometimes we get big numbers, sometimes we don't. Sometimes we get big reactions, sometimes we don't. So dollar index starting to move up and the SPY starting to turn around too. And again, if you want to check out Chart Prime, again, link is in the description. We appreciate the love. Help support the channel. Again, services PMI in about 20 minutes, 23 minutes or so. I got my Saints hat on, even though the Saints lost Louisiana football not looking good after last week. Yeah, I had a lot of faith in Derek, but I don't know, man. No, get out of here, Chris. Winston, dude. Winston is terrible, bro. Like, for whatever reason, like, people bring up his college days and they use that as justification for Winston somehow being some type of elite quarterback, bro. Have you seen Winston play in the pros? Not in college, in the pros. Winston sucks, dude. He's terrible. He's not very durable either, but he's just not good, man. He's just not good. Like, yeah, he might have had a few good games, but like, if you look at his entire career, he's just not good, man. He's just not good at all. Right? Like, people bring up his college days. It's like, bro, listen, I wish Winston was good, right? But at this point in time, Taysom Hill's looking better than Winston is as a QB, which is a problem because Taysom, he can't even throw the ball very well. He can run really well, of course, but like, again, get Winston out of here. People are over loyal to Winston, man. Just get him out of here. Like, he's not worth the money. Yeah. Yeah, I feel you. I'm not mad. I'm just joking with you. But again, people are just so over loyal to Winston, man. He's just not that good. Getting old too. All right, guys. Hey, we got 4 minutes here. 4 minutes. Again, we got ADP payroll numbers coming out too. All right, Nvidia still trying to hold 437s. Maybe I should have stayed in my short. The dollar index is starting to rise back up, though, is a problem here, guys. So again, the dollar index is not looking good for markets. That is, we're gonna put this up and watch Nvidia and a couple other blue chips. But again, we're getting ready to trade futures here. About 3 minutes. Yeah, thanks, Polaris. Yeah, I mean, we got Derek Carr. I mean, I don't know, man. I don't even know what to say about it. He hasn't been that bad this year. It's still early in the year. I mean, we're 3-2, so like we still got a winning record technically. But the Bucks game, we did not look good at all. Now the problem is we got the freaking Eagles with who was he, man? He was at Alabama. He was at Alabama. He went to was it Georgia? Was it Georgia? Did he go to Atlanta? Man, I can't think of his name. The Eagles quarterback. I'm sure the chat already answered me here. Answer me, chat. Y'all know exactly who I'm talking about. Jalen Hurts, Oklahoma. Yeah, it was Oklahoma, not Atlanta. It was Oklahoma in college. He was at Bama, went to Oklahoma. So yeah, the problem is we're in a division with the Eagles, right? Who are 4-0. They went to the Super Bowl last year. I mean, it's gonna be a tough division for us. Astros got there though. Yeah. Yeah, Hurts. He's good, man. I like Jalen Hurts. Ever since LSU played him in the playoffs in 2019, he was good, man. He was good. I like him a lot better than um, all the other quarterbacks in that season, except for Burrow, Joe B. Anyway, Spy dipping down under. I should have stayed in the short, I guess. We got a minute and a half left. Oh yeah, you're right. I'm sorry. The Saints are not. Yeah, you're right. We got the Bucks. Sorry, I was looking at the stats. So yeah, we got the Bucks, the Falcons, the Saints, the Panthers. I mean, if we're in a division that we could do okay in. All right, here's the opening bell. You're actually right, Casey. My bad. Yeah, we're in the problem team in the NFC South is the Bucks. Sorry, we're not in the Eagles division, and I'm glad we aren't because they look like killers, man. Anyways, hey, market's about to open up in 45 seconds. I'll talk about football or sports all day, so I'm gonna have to change because so people don't get too mad at me for talking sports. Boo 49ers. All right, guys. Hey, here we go. Again, micro. We got NVIDIA here on the right. NVIDIA is one to watch too. Markets open up in about 20 seconds. All right, so here's the opening bell. There's the open. Again, watch NVIDIA. I think NVIDIA is going to have a heavy influence over the market right now. There's the SPY at 422s. Again, we do have non-manufacturing and services PMI today. First one drops at 945. Very relevant for markets. Big one is at 10 though. The ISM data. NVIDIA dipping down, testing that 200 EMA. You can look at it on the right side here. Look at NVIDIA test that 200 EMA. We also have the SPY at 422s. 422s on the SPY. I mean, there's the markets bouncing up a little bit. Let's see if we actually hold. Oh, dang. Portfolio looking a little bit better today, but trying to think of what else I bought. We got Walgreens there. There it is. All right, so again, got a little pop-up. NVIDIA back up to 438s. Again, I'm going to wait, let time play out first. Part of me wants to short this little pop too because of NVIDIA's retracement, but I think I'm going to wait. Looks like waiting is the right move. SPY starting to head up. Look at the NASDAQ too. NVIDIA trying to hold. Let's put up Tesla here too on the right. Tesla ripping up to 249s, making that push towards 250. Yeah, Tesla looking good. Looks like me shorting would have been a bad move. I'm going to short now. NVIDIA dumped under lows. One contract though in my funded account. We're going to add to it too if we can. All right, so there's two contracts here. NVIDIA breaking down. We're going to see if that drags the market down. That's what I'm looking for. Although Tesla's strength is going to impact this too. Again, there's NVIDIA falling down. We're almost flat on the trade, flat on the day. There we go. Green on the trade now. Look at NVIDIA flush. That's what I'm shorting. Again, problem is Tesla's still ripping up. Nvidia's right at the 200 EMA though, which is a big like milestone level. It's a small trade. I'm trying to build up a cushion on the day first. There we go. All right, we took half off there, locked some profit in. Green on the day now, but not a very green day. Watch Tesla, though. Tesla's going to be a big influence, heavily weighted stock as well. Watch AMD also. I don't know if I feel this song. I mean, it's cool, but like, it's a little bit too, I don't know. I just don't know if I'm feeling this one. All right, so we're slightly red on the position. Tesla's dragging this thing up. Back down here. I don't know what I want to do with this. I'll probably cut this. I feel like I'm trading against the trend, and so I'm going to cut this and get out pretty flat on the trade. I see Nvidia starting to make that test up, and I see Tesla ripping over 250, so we're going to cut it and now wait. I'm going to switch to the regular E-mini on maybe one of my other accounts. Let's figure out. There we go. Make sure it's the right one. There we go. All right. Tesla over 250s. Looks good. I'm going to buy this dip. Oh, crap. I'm still in the micro, dude. I got to hurry up. All right, so we got one contract to the micro. Or one contract to the regular E-mini. Again, I see Nvidia ripping up too. So we're up about 25 here. Again, I'm going to add more to this because I think Nvidia spiking up is very bullish. All right, we took half off there to lock in profit there to protect the trade. There we go. All right, so we just made about $100 on that trade real quick. You see the P&L on this account. And again, if you guys saw me predict that trade, I mean, we predicted it pretty accurately. I was even trying to hurry up because I thought we were going to bounce. And again, you can learn from my style here, which is like I watch NVIDIA. I watch the heavily weighted influential stocks. Sometimes there's a lag in between the influential stocks and the broad market indexes that I'm trading. And so if I see NVIDIA rip over the volume weighted average price, rip over a major support level, rip over major levels like that, then that gives me a chance to take advantage of that lag. I can hurry up and rush over to the NASDAQ and buy that dip and then catch a bounce just like this that we predicted here to kind of show you what I mean. That's kind of how it works, and that seems to work really well for me. Market's ripping up. Again, we called it. We'll see if it continues. So let me mute the music real quick. All right, guys. Hey, we got 7 minutes. 7 minutes until we got these numbers coming out. All right, guys. Tesla rip it up. E-mini rip it up. All right, guys. Hey, look at the market rip. All right, so there's the E-mini pushing up. Look at NVIDIA rise here. So NVIDIA breaking over that VWAP level works really well. All right. Huge rip in NVIDIA, huge rip in Tesla. I thought the market was going to be bullish today, to be honest. Huge rip ups, man. Look at the E-mini fly. Look at NVIDIA fly. All right, guys. Sorry, I'm kind of. Let me post this. All right, here. Let me get the music back again. Well, the market's a little bit too high for me right now to take positions. So again, but look at NVIDIA rise. So maybe we'll get a dip. All right, so again, still ripping up. Look at Tesla, man. Tesla has broken the screen. It's all the way up to 253s. All right, team. We got 5 minutes left. 5 minutes. Where's Carol? Carol's hanging out. Dealing with my son, probably. My son's home from school again today. So, all right, guys, there's the dip. I'm going to buy this dip short term. See if we can catch a quick little pop up. Again, we got a cushion on the day that we can swing into. All right, there's a little bounce. I'd like a little bit more, so I kind of want some larger size here, to be honest, because we have a cushion on the day that we can use to swing into it. Although we'll take one E-mini contract if we can and use that to just make money. There we go. Yeah, I didn't have time to add to it. I would have added to it. Job is to build up that cushion, which we already have. All right, so yeah, we're up about 150 now on the day. Built up another cushion. Here's the P&L on this account currently. And again, the NVIDIA market looks pretty strong. For fall break? Really? What kind of break y'all get right now, man? Satoshi Nakamoto resurfacing. All right, so we're still getting a little dip. 3 minutes before the manufacturing and services PMI. Or we got services PMI. What holiday is it based on, Pawn? Mine aren't out for that. My son's home for another reason, but... All right, so here's a little bit more of a dip. Again, guys, in less than 2 minutes, we have services PMI data coming out. Again, it's base manufacturing, or no, it's base services PMI. So it's not really like a huge... This one's big. It's services PMI. Expectations are 50.2. 50.2 for services PMI. The 10 a.m. ISM services PMI one is the big one, though. So the 10 a.m. one is the biggest one. What fall break? Higher means economic growth. And so again, if the market follows the trend that it's been in, the market wants less economic growth and a lower number here. But I'm not 100% sure. We're just speculating here. We got about a minute left. Again, I'm really not sure. All right, guys, again, here goes this report. 50.2 is what's expected. 50.2. Oh, yeah. All right, here we go. 50.2 is what they're expected. And services PMI. 20 seconds, guys. 20 seconds before services PMI data. All right, guys, here we go. 10 seconds, 10 seconds. Hit the live button next to the play button. Make sure you're fully caught up. This is the first one. The next one's in 15 minutes. And here's the release. Let's watch the market reaction. 50.1. 50.1, slightly lower than expected. It might cause like a slight bounce in markets. 50.1 versus 50.2. And again, subscribe if you haven't yet, guys. We cover all of this stuff very quickly. As you can see, S&P Global Composite PMI at 50.2. S&P Services PMI at 50.1, lower than expected, guys. Lower than expected. Market is still dipping down some. But again, we cover it quick. 50.1 is what it showed up as. Again, hit the subscribe button. We have our sources, and we cover this data very, very quickly. Each major report we cover it. Again, 50.1 for services PMI, 50.1. The next big release is ISM Services PMI at 10. $50.1 versus 50.2 expected. Next big release is ISM Services data. All right, guys. Again, services PMI. We got ISM Services PMI at 10. It's the big one. This one's small. Tesla breaking highs up to 252s right now. So the market is green today. Although the E-mini is struggling to find a hold. TKAT, just a sketchy, hyped up penny stock. Looks like 21 cents. I mean, what happened to Kane is what happens to most penny stocks. We're not on a recession, Avalon. We're nowhere close to a recession. GDP growth was actually there. So you got to understand what a recession actually is. We're not there yet. I'm not saying we're not going to hit that, but we're definitely not there yet. Again, we got 14 minutes. 14 minutes. Yeah, 20-year. TNX flat on the morning open. Again, is it time to buy the dip? I don't know. I don't know. We got a cushion on the day, so I think it's looking weak. I'm going to go ahead and buy this just because we've had so many red candles already that I think extension-wise, it might be time for a little bounce. Let's also watch NVIDIA here too. But we've had 1, 2, 3, 4, 5, 6 red candles. Now, it doesn't mean we're going to not get another one. But we got a cushion on the day that we can swing into, so I'm going to try. And Tesla still breaking up. It's at 253s right now, 253s. There we go. Slide green. Give me the bounce. Up about 50 on the day on this trade. Go ahead and lock that in. All right, guys, we're up just a little bit under $200 on the day, about 187 on the day, 186. We got a 3-to-1 win-loss ratio on this one on the day. Another thing, guys, so this has been some drama that's going around. So who do you think is the real Satoshi? Who do you think it really is? Okay, we have a Twitter profile by the name of Satoshi Nakamoto, who is self-proclaimed to be Satoshi, right? He's basically saying he's the creator of Bitcoin. He made a post titled, "Bitcoin was created for everyone. The next halving is an important predicted occurrence when transaction fees are meant to start to supplant the mining subsidy." And he said, "They are many who do not want you to know the truth. It is not that they want to silence this account. They want to silence you. 2024 is the year of the dragon," end quote. And again, this is from the new profile who hadn't posted in 5 years, just made his first post. Now, if you look at this is Craig Wright's profile, and Twitter actually added some context under it that said, quote, "Readers should know that Craig Wright claims to be Satoshi Nakamoto, but has proven to be a fraud. He controls this account and it should not be trusted." Where are you? Do you think Craig Wright is Satoshi? Let me know in the description or in the chat. Hit the follow button. We cover all the major market news. We appreciate it. But yeah, let me know what you guys think here about this news. We did get a nice little bounce. We did get a nice little pop. Again, we'll see if we actually hold now. Again, I thought we might bounce, and this is how you use an extension to find trades. Remember the trade idea? We said, hey, well, we've had 1, 2, 3, 4, 5, 6 red candles in a row. It might be time for a small bounce. Boom, small bounce. That's how you trade off of extension. All right, guys. Tesla still tried. We got 11 minutes, guys. 11 minutes before the actual ISM services PMI data comes out. All right, guys. ISM data. NVIDIA is still trying to hold the volume weighted average price. The Dixie's still moving up. The dollar index still rising. All right, so breaking all the way back down from the dip. All right, guys, we got 550 people here. I'm also going to throw this in sub-only mode. I'm also going to throw this in sub-only mode. So if you have not already, market's still dumping down ahead of this report, man. It really interesting here. Again, we're going to throw it in sub-only mode. If you haven't already, subscribe. Hit the notification bell. Again, we cover this data quick. Yeah, the music's off. Sorry, I've been working on shorts in the background. Stolen valor. Yeah. Yeah, that's what I'm wondering. When do kids get fall breaks, bro? I don't remember my kid ever getting fall breaks. Again, Tesla, pull it back. We got 8 minutes before the ISM PMI data, guys. 8 minutes. Subscribe if you haven't. Yeah, we appreciate the love. Again, just to bring attention to Chart Prime again, guys. Look at this, man. Like, look at the E-mini calls on this thing, dude. Call the very top on Chart Prime. I'm gonna go back check some of the other ones too. We back checked it. We back checked the reversal signals. So, all right, guys. ISM PMI data. All right, look at Tesla dip. NVIDIA is also helping the market today. So kind of a flat day ahead of this ISM report, which might mean that this ISM report is big and relevant. Again, hit the live button, hit the play button, hit the like button. We appreciate it. Remember, we got 6 minutes left, about 6 minutes, 7 or 6.5. Here's the opening bell today, guys. So the opening bell was here. So we're very flat on the day. If you look at the market, here's where we opened. We pushed up a lot, dipped down a lot, bouncing back up a lot. Again, watch NVIDIA. Look at the support level we drew at 437. We drew this a few minutes. Like, I don't know when we drew this, to be honest, but it's holding really nicely too. Watch Tesla as well. Very relevant. All right, big bounce back up here. Again, we got 6 minutes. Big pop. All right, guys, be ready. Again, we cover this day. We cover this daily. Big pop. 5 minutes left. I'm here. New buy button. Hey, what's up, William? Bonds are rallying. Be confident in that dollar. Earnings run up is only chance to squeeze money from the tech stocks, I think. Yeah, earnings. Again, we got a lot of economic reports coming out over the next couple months, right? Number one, over the next few weeks, we've got a gang of stuff. Like, just to put this into perspective, okay? We talked about this before, but over the next couple weeks, this week specifically, we got unemployment and payroll numbers on Friday, right? That's a very big report. We got jobless claims tomorrow. That's a pretty big report. On Friday, we have unemployment and payroll numbers, like I said. Next week, we have earnings season starting with bank earnings, Pepsi earnings, JP Morgan earnings, a lot of big earnings next week that starts, as well as the FOMC minutes report, as well as CPI, which is the biggest inflation data release that we get, as well as PPI, which is the other side of that, as well as a lot of other stuff, man. Again, we just got jobless claims, a lot of other economic reports next week. Just a big week for markets, right? So regardless of what the market does technically here, it's not going to mean very much because of these economic reports coming out being massive. Like, these are massive economic reports coming out, right? So these are huge reports. And so in that regard, it's very important to watch this stuff. And so again, technicals don't matter as much right now. What matters more so is what happens with these reports. Right, so dipping down here again, 3 minutes, guys, 3 minutes. Again, NVIDIA at 438, trying to hold. We got 2 minutes, guys, 2 minutes. I see a lot of fib playing Twitter who's gloating about technicals being gospel, getting burned. Yeah, I mean, you see people like that, right? Like, listen, technicals, Fundamentals are always going to trump technicals. Anybody that watches economic reports and understands economies are going to understand why, right? Technicals are cool. Fundamentals move markets much heavier. The only thing that matters is extension when fundamental reports come out, and they're going to influence what happens with these reports. But again, people acting like some type of golden flying triangle moving average crossover pattern, right? They're acting like sometimes you get people that are just out there, right? And what you'll see a lot of the times, hey, we got about a minute and a half left. One thing that you'll see a lot of the times is like, we'll get a CPI report come out, and the CPI report will be like way worse than expected, come in way hotter than expected, way higher inflation problems than expected. And so naturally the market drops, right? And then you'll see people bring up like, nah, bro, the market didn't drop from CPI. The market dropped because of this crossover moving average pattern that just showed up. And it's like, bro, get out of here, dude. Like, people are funny, man. Hey, we're waiting for services PMI data, which again, the market has feared economic growth and higher job reports coming out lately. Job reports have come in much hotter than expected lately as well. Jolts dumped the market. We had non-farm data bump the market up today. And then today we have non-manufacturing and services ISM data coming out today. Expectations are for 53.6. They drop in about 20 seconds, 15 seconds really. Make sure you hit the live button next to the play button. Make sure you're fully caught up on the stream. All right, here we go. Here's the report. 5 seconds. 53.6 is the expected number, and 53.6 as expected ISM data. 53.6 ISM report. 53.6 as expected, exactly as expected at 53.6. And again, we cover this data as soon as it drops, guys. As soon as it drops, we cover it. 53.6 services PMI as expected. Technically, this is neutral. Again, 53.6. Non-manufacturing business activity came in higher than expected, but the market seems to like this report here. We are pushing up a little bit on this report, but 53.6 as expected. Again, we'll put this number up on screen as well. As expected services PMI. There's the data release right there. All right, so again, dipping all the way back down. Market's very flat here. So the market is still in a way very neutral, very choppy, very unknown what we're going to get here. So the market just doesn't know what it wants right now. ISM data came in neutrally. And then again, guys, tomorrow we have jobless claims. We also have some Fed speakers today. We got import and export prices and jobless claims as well as the challenger job cuts. And then again, on Friday, unemployment and payroll numbers drop. So a big week all around, a big day all around. And again, we'll see if we get any good reports here. Very flat market open. And again, if you want to day trade this report with me, you can see so far on the day in my Combine account, we're up almost 200. And again, you can day trade with me on Top Step. It's the most legit futures funded program in the world. They pay out millions, fund thousands of traders every year in actual withdrawals. They've been around for over a decade. They're kind of who all the other ones copy off of. And it's really important because most day traders lose, right? When I first started day trading, I did it on a platform called SureTrader, where I deposited thousands and I lost thousands of dollars within a couple weeks. Was disheartened, kind of just destroyed by it. Almost wanted to cry, right? And so if I would have had something like this, I would have loved it because it would have limited my risk, but you still learn how to trade under pressure. And so what they do is they give you a demo, they test your skill. If you can hit the target while following their rules, they fund you the same amount. So if it's a 50K demo account and you can make 3K without losing over 2K and following their rules, they fund you 50K with a 90% split, and you get to keep your first 10K in profit. And so what this allows you to do is get in for a much smaller investment. For 49 bucks, you can trade this. Again, they're going to give you a demo account. You still have some pressure. It's not the full extent and risk of putting up the money yourself, but that's a great thing because if you lose, it's not the end of the world. But if you're good enough to pass it, again, you get a lot of the rewards of putting up the money yourself. You get a 90% split, all that good stuff. Great way to learn day trading with less risk. And in the futures market, there's no PDT rule, and you can day trade the S&P, the NASDAQ, which is basically the SPY and the Q, currencies, gold, silver, all that good stuff. If you want to check it out, here's the link. Yeah, honestly, market's dumping right now. Dixie, rip it up. Dollar index flying. Market has turned. And again, this is heading into this week, which is ISM, or no, we got ADP payroll data on Friday. That's going to be the next big one, right? The ADP payroll data as well as unemployment, but the payroll data. Y'all be ready for that. That's a big release. Payroll data coming out. Again, when you see how much the JOLTS job report influenced the market yesterday, payroll data is big. It's important. When the market's fearing inflation like we're currently in, it's a time in which you got to be incredibly careful. Because, again, if jobs numbers come out good, bad, there could be problems. So just be smart, be careful, understand. We got a lot of economic reports coming out this week and next. And, market's down a lot. And again, one thing that called this latest dip is Chart Prime. And so again, trading view indicator service, you can use it in stocks, crypto, Forex, futures. Like one thing that I'll do a lot is I'll watch engulfing candles show up. And again, if you get a bunch of engulfing candles around a reversal signal, it's usually a pretty good indication of a dip. And again, we back test this earlier, right? And we can keep back testing it, but I want to also this time show you guys the regular market Oracle Pro. And so this is the market Oracle. You can also see there's chart patterns. It'll show you chart patterns, wedges. Look at this. So the rising wedge, and then look at when this flag pattern breaks. Look at that breakdown. And so again, you can try out the regular Oracle Pro. I'm pretty sure for $1 right now. For $1, you can try it out. It gives these buy sell signals, these strong buy or sell signals. And again, you can use this in stocks, crypto, Forex, futures, whatever you want to use. And let's just zoom into a random spot here. This is a shorter term one. This is a 5-minute chart. Look at the strong sell signal here. The strong ones are powerful. So look, strong sell signal here, nice drop. Sell signal here, drop. Buy signal here, bounce. Buy signal here, bounce. Buy signal here, bounce. Strong sell signal here, drop. This one might have been wrong. But again, I can't fake what I'm showing you. Nobody can. I can't guarantee you're going to make money or anything like that. But look at this. You can kind of see you can ride the highs and lows too. And if you catch a triangle pattern, using all of it together just can be powerful. Look, buy signal here, rip. Sell signal here, nice drop. Look at the sell signal way up here. Huge drops. And this is a 5-minute chart. And again, you can use this on Apple, Amazon, Disney on a 1-hour chart frame. I can use it on a 1-minute chart frame if I want to do it that way. Again, it's a Chart Prime trading view indicator service. I used it to get my gains today. So I used it to make this money today after the opening bell. I called that reversal signal and the engulfing candle together. And that just works really well. But you got to, I love grouping them together personally. But again, they are a sponsor, so I'm definitely biased. If you want to check them out, you can use that promo code right there. 14-day free trial for only $1, literally $1. You can try it out. And so again, it can be powerful if you want to check it out. There's the link. Great way to help support your boy here in this channel. And green day for me so far. Again, the market looks weak. Part of me wants to short this. And we already got a cushion on the day. But, and again, if you want to check out Chart Prime, there's the link, $1. Core durable goods didn't just drop. I'm pretty sure they didn't. Chat, let me know if you guys think they did. I don't think they did, though. Yeah, we don't have durable goods. We got factory orders and ISM services, PMI, but it's not durable goods. We got ADP employment numbers. Tomorrow we got the trade deficit and jobless claims at 8:30. Some of the Cleveland Fed President Meister speaking at one of the payment symposiums. We got Fed President Daly speaking and Barr speaking as well. Friday's the big day this week, though. Again, Friday, unemployment, non-farm payroll data, consumer credit at 3. And then next week is a huge week. We got PPI, CPI, jobless claims, import-export prices, the FOMC minutes report, earnings on Friday, bank earnings specifically like JP Morgan. Look, just to put this into perspective, earnings season is one of the most volatile parts of the year. Starting next week, if we look at earnings whisper here, right? So starting next week, let me dip that down. So we got Rite Aid, Walgreens, Delta, Lovesac. Again, this all starts Thursday. And then if you look at this, Friday, JP Morgan Chase, BLK, Citigroup, Wells Fargo, Progressive. A lot of big earnings drop next Friday too. And again, we stream and cover all of this stuff, guys. So if you have not already, again, we stream and cover all of this stuff. So if you haven't already subscribed, we appreciate it. Again, market's still breaking down. I thought we looked weak, and it looks like we were. Dip until CPI or mid-October, then rip. Market is still dumping down here, guys. Look at this huge drop. Market's flying down. Wow. Yeah, I should have shorted too, to be honest. Tesla dipping down finally. Again, Nvidia's dragging it down. So Nvidia is like one of the big influences over markets. It'll rip. Yeah, we'll see. I hope so. You get Nvidia testing that previous closing price. This might be a big spot for a bounce level here for sure. IG? I don't know. Does IG let you trade? Hey, I'm going to get out of here, guys. I love you all. Y'all be safe. Y'all be good again. We'll be back tomorrow. Jobless claims numbers tomorrow. I think that's it for the day, right? We don't have any other big reports today. I'm pretty sure we don't. And so, yeah. Reports are done. Economic reports are slow now. I'll see you guys later. Y'all be good. Love you all. Be safe. I'll see you guys tomorrow. Be safe today. Volatility is out there now. Big dips. Looks weak, though. Market looks weak, personally, but I have no idea what the market's going to do. Not an investment professional. Don't sue me. Love you all. Y'all be good.